some gains and want to gobble up more because it's such a great technology.
Right.
And that may be a risk to the tech space, the communication space, the companies that are actually producing the technology.
Can I just ask you, bank stocks are going to kick off earnings, right? We've often talked about how important banks are in terms of economic indicator, market indicator. Just got about 20, 30 seconds. How are you thinking about that group, which have had such a rally, especially later in the 2024?
Yeah, very mixed picture there. Financials are one of the top 3 sectors in our sector scorecard methodology, partly because they're not too expensive. They've got decent estimate revision momentum. They've got decent price momentum. Earnings trends are pretty sound. All of these things, you'll notice I'm hedging with a lot of qualifiers. Pretty sound, decent. You know, it's not wonderful. The wonderful was a combination of monetary policy, which is now a little questionable, and potential fiscal policy. There is this underlying assumption that we're going to get some regulatory reform. We might see some big IPO activity, some M&A activity emerge.
So we'll keep an eye on it.
So keep an eye. You got to hear this come from the companies themselves.
Gina Martin-Adams, thank you so much. Speaking of keeping an eye on, we are also watching the semi space in today's trade. More on that when we come back.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher across the board, but we are well off session highs with the S&P 500 index right now advancing 36 points. That is a gain of 0.6%. We've got the Dow up 57, higher by 0.1%. NASDAQ up 217, up by 1.1%. 10-year at 4.62%, the 2-year 4.26%. Gold down 0.3%, 26.33 the ounce, and West Texas Intermediate crude oil down 0.6%, 73.49 a barrel. Bitcoin up 3.5%. Bitcoin very close to 102,000 once again. Again, the Dow, the S&P, and NASDAQ all advancing. Chip stocks, as we have been reporting, are surging. Case in point, NVIDIA up now by 4%. That's ahead of a speech by CEO Jensen Huang at the annual CES convention in Las Vegas. We got a whole lot more on chip stocks with R.N. King coming up in just a moment. Again, recapping, the Dow, the S&P, and NASDAQ all advancing. S&P up by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As we mentioned, semiconductor stocks definitely have been way outperforming the broader trade today. While off their high, let me just pull it up on the Bloomberg terminal. We saw the stocks up more than 4% at its highs, still holding on to about a 3% gain. So easily outperforming with most names in the index have been showing some gains. NVIDIA is headed toward a record close ahead of a speech today, as you heard from Charlie, from its chief executive. Jensen expected to make some comments at the closely watched Consumer Electronics Show, CES trade, underway in Vegas. There's also some news out of Hanhai. I hope I'm saying it correctly.
Just say Foxconn.
Foxconn, the world's largest maker of Apple iPhones. Thank you so much. This is why I love this guy. A lot going on, which is why we kind of wanted to reach out to our Ian King to kind of figure out what to focus on with so much coming at us and the sector really outperforming. Ian, of course, Ian King, Bloomberg News, U.S. Semiconductor and Networking reporter. He's out there in our San Francisco bureau. Ian, you know, there is a lot going on, and we're watching this group outperform in a big way. What are you most thinking about? What's top and foremost, and that you think our Bloomberg audience should really kind of take of note when it comes to the semi space today?
Yeah, I mean, it's not just today. I think over the last couple of years, we've seen a massive transfer of wealth into relatively few companies, all on the expectation that AI is changing computing, and that the guys who are providing the underpinnings of these new computers are going to be the ones to profit. So we had Friday, we had Microsoft saying it's going to continue to spend, I think, about $80 billion this year on data center gear. Then we have Foxconn, which is in the supply chain, talking about they're doing a little bit better. Guess what? They're the computer makers that actually put the NVIDIA chips into the machines. And then you see derivatives like Micron going up because guess what? Hey, if data center demand is strong, there's also a shortage of a specific type of memory chip that goes into these AI systems. So in general, I think investors, having made these huge bets, are looking for reassurance, and we're getting some of that reassurance early in this year.
Is it reassurance? We just had a deep dive with our Gina Martin-Adams, who watches the equity universe, and we talked a lot about the Mag 7, and she's a little concerned about some of the fundamental, yes, these companies in terms of earnings and sales still growing, but not at the levels that we've been seeing. So from what we are hearing, what you are seeing, do you feel like things are, though, quieting down a little bit?
I mean, how can they continue at the pace that they've been continuing? We've talked, we're not talking about, a $10 million move in a stock price here. We're talking about hundreds of millions, if not hundreds of billions of dollars of money being transferred on a daily basis in and out of these shares. And they're, given the amount of wealth that's already there, over $3 trillion for NVIDIA, it's so much money has concentrated into it. So in a way, it's very difficult to justify that on a fundamentals basis. So I understand how some of our colleagues and some of the more fundamentals-based investors would look at this. But at the same time, we are still heading up and to the right in most metrics.
Ian, I have a lot of questions for you. I do want to start with something that we talked about with Gina Martin-Adams, when big picture, as Carol mentioned. I'm wondering from a cycles perspective, because you've been covering the semiconductor space for quite a while, and you understand that this is a cyclical business. I'm going to ask you the same question I asked Gina, but this time with a focus on semis. Is this time different? Is this cycle different?
Well, let me give you an anecdote. Lisa Su, the CEO of AMD, one of the more cautious CEOs, one of the ones who would never be that promotional, has actually signed off on incredible growth for this industry. She's given some really strong targets which point sort of up and to the right. At the same time, when you speak to her and say, so things are different now, she says, no, of course not. There will always be cycles. We'll always overshoot. So
how do you make sense of that then?
Yeah.
Well, because think about this. How long does it take to make a factory? How long does it take to make a computer, right? It takes weeks to make a computer, so demand changes on a quarterly basis. To put a factory in place, more than a year, 2 years. So you're trying to, to make a chip takes 3 months at least. So you're trying to balance all of these things together. It's like juggling balls that are all different sizes and different weights. It's impossible to get it right.
So where are we in the cycle then, Ian? If we are still in one of the classic chip cycles, where are we in this one according to the analysts and the executives you speak to?
Yeah, and that's a very good question, and there's notes about that today. In some areas of the industry, whether it's automotive or industrial, we're probably at the bottom or close to the bottom of the cycle. Things aren't good at all. If you're talking AI, whether it's for these high-end processors that NVIDIA makes or the high-end memory that somebody like Samsung or SK Hynix makes, where's the top? It appears that there isn't a limit right now. So I think that's what has made this cycle, if you want to call it different, in that it isn't a conventional one. It's not an everybody in, everybody out type thing. Signs are mixed. Smartphones aren't great. PCs aren't wonderful either. But who cares? Because guess what? Everybody's building data centers.
So the news out of Foxconn that we mentioned, put that in perspective, the significance of that.
Well, again, I think it's just to the point that we were just talking about. Foxconn in the past was a read into how many laptops are being made, how many smartphones are being made. And the answer is, well, kind of roughly where we would expect to be, if not a little bit behind it. But guess what? We're making these new machines that haven't been made before, and it's still in a growth market. People like Microsoft are buying and building these giant data centers.
Apple's not your coverage universe necessarily, Ian, but when we talk Foxconn, Apple's the first company I think of. And indeed, when I use the supply chain function on the Bloomberg terminal, I see that Apple accounts for close to 40% of this company's revenue. Foxconn, are we seeing this company transform itself because of what's happening with these other customers? Will they become significantly bigger customers than they are now?
I mean, there's been a sea change in that these large companies, the Microsofts, the Amazon AWSs, have shifted from being buyers of computers to being makers or designers of computers, and they have to find somebody to do that for them. If they're not buying from Dell or HP, then where are they getting them from? And it's clearly companies like Foxconn. How quickly can they change what they do? Can they respond to being this sort of closer to the end user type customer? And we've seen, various companies react at different speeds. Even the traditional Dells and HPs are also adapting what they do themselves. And really, at the end of the day, the same amount of computers is going to be made. It'll just be different types of computers, and who is making those critical margin dollars on those computers will be what changes.
Ian, you have a story on the Bloomberg, too, that talks about Qualcomm introducing new chips designed to power PCs capable of running the latest artificial intelligence software that costs as little as, or might cost as little as $600. All right, so how does this piece fit into the AI narrative that we're having? We've heard, folks talk, Michael Dell and others, talk about AI PCs. So how do we kind of layer this in on the AI narrative, especially as we gear up for the Consumer Electronics Show, CES, and a speech from Jensen Huang this evening? I'm just trying to piece all these things in and where we put them in and what it means in terms of the AI trade, the investment, and the overall story.
Yeah, no, that's a good question, Carol, and we're going to see a complete competing flurry of announcements about AI PCs. The big hope so far that underpins all of this is that, guess what? How you use your PC is going to change. You're going to talk to it. It's going to make suggestions. It's going to help you organize your life. Haven't really seen that happen so far, but whether it's Qualcomm, whether it's Intel, remember them, whether it's AMD, whether it's NVIDIA in a different way, they're all saying, hey, look, using our technology is the best way to get to this end goal of having this device be new, and they're all hoping that it's going to stimulate growth in the PC market. Who's going to win and who's going to lose? it's probably too early to say at this point. Qualcomm is a kind of a new entrant, and now they're kind of lowering the price point, which is an interesting take on it, and we'll see how that takes off with consumers.
Ian King, do I hear you talking about the benefits of an AI PC here? Is that what I'm hearing?
I've used one, and I was surprised. Yeah, it was okay. I mean, I'm not going to start talking to devices unless I absolutely have to. I'm an old man, as you can tell. But they are surprisingly useful, and it is an efficiency tool.
The reason I ask about it is because for a couple of years we've been hearing from these makers of PCs and laptops about the AI PC being sort of the next iteration, the next catalyst to move actually devices when it comes to these companies. Yet I don't think we've seen a convincing use case yet at this point. What is that convincing use case?
No, you're absolutely right. I mean, the knock against notebooks has been for years that, well, a little bit faster, a little bit higher resolution on the screen, but so what, right? A little bit better battery life, so what? Why can't they even do what your smartphone does? So what we're seeing in these new generation of devices is at least the kind of abilities that your iPhone or a good Android phone has. You can talk to it, voice recognition, all of these kind of things. But if you're looking for one killer thing, I have to agree with you. It doesn't have me running out to buy a new machine yet. I think it's kind of nice to have, but not essential at this particular point.
All right, so then, Ian, is it a kind of whip-de-doo, the story you have on Intel, which is, got a new range of chips that will enable or help enable the longest battery life available in laptops? Is that kind of like in the grand scheme of things? All right, great. Thanks, Intel.
They need to have new products out there that are at least in the conversation.
Okay.
Right?
Yeah.
That's what's going on here.
Hey, speaking of conversation, got about a minute left, and I want to get to this. And first of all, is it Jensen Huang or Wang? Because everybody keeps saying it differently. Just help us here.
I think people who work for him, and I was on a call with some of them this morning, were calling it Huang, right? Heavily pronouncing the H, but you'd have to ask the man himself. He changed his first name. I don't think he really cares as long as his company continues to do well and as long as you were listening to what he has to say.
Well, he is going to talk 6:30 p.m. local Vegas time, 9:30 p.m. Wall Street time tonight at CES. He's giving a speech. What are you watching out for? And got about 45 seconds.
Yeah, it's a consumer show, so we'll see what he has to say about any consumer offerings. But at the same time, all anybody really wants to hear from him is what's next in AI. How well is your AI-related product line doing? So we'll all be hoping for signs of both of those, maybe something exciting for consumers, who knows?
All right, NVIDIA CEO Jensen Huang speaking tonight from CES. Thank you so much, Ian King, keeping us straight on everything in the semi space. Of course, Ian is a U.S. Semiconductor and Networking reporter joining us again from our San Francisco bureau. Quick check on NVIDIA shares, Tim. Up about 5% at their highs today, still holding on to a gain of just shy of 4%.
Okay, help bringing the stocks higher right now by close to 3%. The NASDAQ Composite up by more than 1% as we speak. The S&P 500 off its session highs, but still up by half a percentage point today. The Dow up by 0.1%.
All right, straight ahead, a new day for drivers in New York City thanks to congestion pricing now in effect. Some love, some hate. And yet, have you ever thought how it might be the key to the future of the Democratic Party? We tackle that story right after a quick break. You're listening and watching Bloomberg Business Week on this Monday.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks advancing. The S&P 500 index was trading above 6,000 earlier in the session. Right now, 59.75 where we stand, with the S&P now higher by 0.1%. The Dow little changed, up just under 0.1%, while NASDAQ is up 208, up 1.1%, and the NASDAQ 100 index up by 0.9%. A rally in the world's largest tech companies is lifting stocks. The 10-year, 4.61%, with a 2-year at 4.26%. Spot gold down 0.2%, 26.34 the ounce. West Texas Intermediate crude oil down 0.5%, 73.60 for a barrel of WTI. Cannot ignore Bitcoin today, surging 3.5%, just under $102,000. President Biden is indefinitely blocking offshore oil and gas development in more than 625 million acres of coastal waters, warning that drilling there is simply, quote, not worth the risks and unnecessary to meet the nation's energy needs. Among oil names, ExxonMobil up 0.2%, ADRs of BP surging 2%, Chevron up now by 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, if you live in and around or work in and around New York City, you probably already know this. New York City kicking off its first congestion pricing program in the United States, part of an effort to reduce the number of vehicles in the world's most traffic-clogged urban area, while also raising money for transit infrastructure. Jenna Lieber is the Chief Executive Officer of the Metropolitan Transportation Authority, telling our Bloomberg surveillance team of Tom Keene and Paul Sweeney on Bloomberg Radio earlier this morning, it's all about creating the 21st century city, but he also cautioned it's not going to happen overnight.
It's going to take a little while. So we're going to be watching it very closely, day by day, week by week. I don't expect to see some dramatic change on the first or the second day. Over time, we're expecting a 10 to 20% reduction in traffic. That's what we're shooting for. New York is becoming a 21st century city. We just did 2 train terminals in the last couple of years. LaGuardia Airport, a total rebuild. It's #1 in the country. JFK is getting rebuilt. I know your Newark Airport is getting investment. This is about being a 21st century city where we don't spend all our time stuck in traffic.
Well, there you have it. Jenna Lieber, the Chief Executive Officer of the Metropolitan Transit Authority, with the surveillance team earlier today on Bloomberg Radio, who also said he anticipates a 10% to 20% reduction in New York City traffic over time. Thinking about New York City congestion pricing and the broader politic, especially the future of the Democratic Party, and putting it in an opinion column in the New York Times out early yesterday morning, Henry Grabar, journalist and author of Paved Paradise, How Parking Explains the World Hard Over. He joins us from Cambridge, Massachusetts. Henry, good to have you back with us. Talk about the relationship between congestion pricing and Democratic politics, especially on a day where many Democrats are seeing the certification of President-elect Donald Trump and thinking to themselves, wow, we really got to rethink how we handle ourselves over the next few years and what the future of the party looks like.
Right. Sure. Well, when you look at the results of the election from November, you can see that some of the places that moved strongest towards the Republican Party were the outer boroughs of New York City and the suburbs of New York City. So this is kind of ground zero for figuring out why some Democrats decided not to vote or decided to vote for Donald Trump. And I think one of the theories that's been in play here is that Democrats simply haven't done a good job running the places they control, which is to say big blue cities in blue states like New York, like Boston, like Chicago, like Los Angeles, San Francisco, right? And so in that sense, this is a pretty bold urban policy gambit to show the Democrats have big ideas about how to improve these places. And one of the things that struck people in particular was the sense of disorder. And congestion pricing is nothing if not an attempt to bring order to the streets of New York City.
And we will see ultimately if it does bring order to New York City. Having said that, Henry, is congestion pricing, in your view, a big step toward creating the 21st century city?
I think one of the things that has been apparent in New York over the last 5 or 10 years is that the amount of traffic in the central business district is making it really hard for the city to fulfill its basic functions, to say nothing of its reputation as a global city. I mean, a building catches on fire, somebody needs an ambulance, somebody needs to make a delivery. Nobody knows how long those things are going to take because the traffic has become so bad. So I think when Lieber talks about the idea of a 21st century city, what he's saying is we need to have a kind of reliability about the ease of doing business and going about basic tasks here. And that's what congestion pricing is very much designed to do, in addition, of course, to raising money for the transit system.
All right, so going back to the kind of political aspect of this, or what this means for the future of the Democratic Party, Henry. So how does, if New York City officials and the city kind of get it right, in quotation marks, if you will, how does it really kind of help everyone along the high end of the economy, the lower end of the New York City economy?
Sure. Well, I think the goals of congestion pricing are pretty clear about that there's going to be cleaner air, there's going to be faster commutes, it's going to be easier to do business, and there's going to be more money for the mass transit system that, of course, moves the vast majority of people in and out of Manhattan every day. The number of people who drive into Manhattan is a small fraction of that. But I think the question about how to ensure its popularity among the constituents in New York City, and especially in the suburbs of New York City, that's the difficult question for the governor of New York, Kathy Hochul, right? Because she's up for re-election next year. This has become a subject of intense political debate since she decided to, open up the box and tinker with the pricing, tinker with the implementation date. And so I think what she needs to do is she needs to show that this works. And the challenge is blue cities, right? We know this. They move slowly and they build things at high cost. And so when you implement a program like this, people expect to see results in exchange for the money that's being taken at those tolls. And the challenge is, how can we come up with something in New York to show results from congestion pricing really quickly? Because if the streets are, the traffic is down by 5 or 6%, that's not necessarily something that people are going to be able to point their finger at. I mean, how do you even register that kind of decline in traffic without having some kind of infrastructural improvement to show for it? And I think that's what the city needs to accomplish now.
Will she be given the chance to actually show the improvement or any improvement, given that Donald Trump has opposed it and has vowed to get rid of it? This was put into place before he takes office. Does he have the power to get rid of it?
I don't think he does have the power to get rid of it overnight. I mean, the federal role in this was certifying the environmental review, and that part is done. So I'm not sure that the federal government can go in and rescind the approval that they've already given for the program to go forward. Of course, there are several lawsuits pending, so there's a lot of uncertainty about this proposal, but I would just say, as far as its supporters are concerned, they have somewhat rested on the assumption that congestion pricing will be popular because it has been popular in other places that have implemented it after time, right? And that depends on showing visible improvement, on making real the infrastructure that people expect to use and receive in exchange for that money that's being taken. And they can do that, right? And they can do that overnight by creating bus lanes, pedestrian spaces, actually emergency vehicle lanes, right? Like make permanent the improvement that you see before the sticker shock fades and drivers return and realize that, in fact, it's a lot faster to drive in Manhattan now.
Henry, last question, just to kind of the payoff of your op-ed in the New York Times. You say that people support the policies and the politicians, that they get something out of this concept of deliverism, right? People, if they feel like they're getting something out of it, they're going to be supportive. And that's what shows political change or political sway. And just got about a minute here.
Yeah, that's right. And I think the premise of this, right, is that these tolls are being done in exchange for funding mass transit in and around New York City. And the MTA has a list of improvements such as elevators to make subway stations accessible for people with strollers and wheelchairs, et cetera. But that stuff takes time, right? And it costs way more money than it should, as we know. And so reforming the construction process would help. But I think in the meantime, the low-hanging fruit here is to create improvements for the vast majority of the people who travel on the surface streets, which is the people who travel by bus, right? And that's sort of the opportunity that they have to make these improvements visible immediately before the midterm elections come around and this becomes the subject of every gubernatorial debate.
Did you say circus streets?
Surface streets.
Oh, surface. Okay, because sometimes it feels like a circus.
It does feel like a circus.
It feels like a circus, and that kind of I could jump on that one as well. Hey, Henry, great timing, and really appreciate you coming on and spending your view. Henry Gabar, journalist and author. Paid Paradise: How Parking Explains the World. Hard over. So what?
Are you getting a lot of texts about people wondering about congestion pricing. I'm getting all these texts like, hey, can you see a difference? Can you see a difference? I'm like,
not
I'm
so
inside.
far. Yeah, I don't know. Not yet. I don't know.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are listening and watching.
Hey, the people want skiing, Carol. They want skiing.
They also want to know what's going to happen in the bond market. Fed policy, there's all these things coming together. It's a big week, too, for U.S. economic news. We did see the yield on 30-year U.S. Treasuries climbing to the highest in more than a year in a session that gave investors a bit of a taste of how President-elect Donald Trump may roil financial markets in the coming months. Listen, safe to say all investors are watching what's going to come out of the White House, especially in this first year in terms of policy and what it might do for markets.
Overall, Bloomberg's Michael McKenzie writes today, bond traders are entering the new year with diminished expectations as the resilient U.S. economy and President-elect Donald Trump's tax cut and tariff policies threaten to keep treasuries under pressure. Michael is Bloomberg News rates reporter. He joins us here in the studio. Michael, you talk to these bond traders every single day. What are they looking like this year is going to look like? What are they thinking?
They're really frustrated because normally they could go, what's the data telling us? And then we can kind of map out scenarios. Now you've just got this wild card with the Trump administration coming, new Congress. What exactly is going to get done? What is the sausage making process going to look like ultimately? The problem is we won't know for several months. So the bond market has essentially decided it's time to keep pushing yields up, particularly beyond 5 years. And you've got some big auctions coming up this week. We had a 3-year today that was kind of middling. We've got a 10-year tomorrow that'll be very important, 30-year on Wednesday. This has been brought forward because of the National Day of Mourning for President Carter on Thursday. And then, of course, once the supply is out of the way, we get non-farm payrolls coming out on Friday. and we've got inflation next week. So we're going to be hitting the... you can sort of see the bond market's just decided, we like staying in the 2-year because the 2-year is just near the current effective Fed funds rate of 4.33. They just like camping out in that part of the curve at the moment. The curve is steepening. The dark matter that is known as term premium has just hit a new peak since 2015.
What does that mean?
Basically, that's the compensation that investors want to have for owning 10-year treasuries. It's based on a New York Fed model. But what's interesting is that the 10-year treasuries have risen about 100 basis points plus since mid-September when the Fed began cutting. That term premium measure is up nearly 80 basis points. So clearly investors are saying, if the US government wants to sell me debt, I need a higher risk premium to own that debt. And I think that's one of the interesting developments we've seen here.
How do you think then, we've got a Fed meeting too at the end of this month, right? And I'm just curious, do we get some more clarity about, I don't know, I felt like we got a lot of clarity maybe last time around in terms of the Fed kind of reducing maybe expectations for rate moves this year. Do you think we get a doubling down on that or just kind of a rinse, repeat kind of thing?
I think Wednesday we get the meeting minutes from last month's meeting, and that's going to give us something because Beth Hammack was the one who dissented.
Yeah.
Clearly some Fed officials are beginning to price in what is a Trump administration going to mean for monetary policy. The Fed did go from previously thinking there would be 4 cuts this year to down to 2. The bond market right now is saying basically 1. It's a flip of a coin whether they go to 2. So I think actually for the Fed, the meeting in January is not really going to matter that much. Okay. It's really March, because that's when they'll redo the summary of economic projections. But by March, we'll have had 3 payrolls, 3 inflation prints. And this does seem to Fed that's worried about inflation rekindling this year. And that's, again, is why investors...
Because of Trump policy?
In part because of Trump policy.
Yeah.
But I think, don't underestimate, this economy still continue to go pretty well here. We're not seeing any real cracks in the consumer beyond subprime, which is always subprime, unfortunately. So realistically, if Trump pours a bit more fuel on the fire here and the economy picks up growth, then inflation stays sticky. That's why bond managers are saying, I really don't want to own the long end here. And so we'll see. Tomorrow's auction trends will be important. A real important litmus test, I think, for the market.
What would you say bond traders are looking at as the single most important policy outcome during the Trump administration, or at least during the first year of the Trump administration, given the connection to inflation?
I think it's whether he gooses the economy to a point where you get more inflation coming through. Because
so is that tax cuts? Is it tariffs? What would it be?
Deregulation, because deregulation also opens the door to really excessive, stuff going on, which is kind of what we saw before. I always remember, this dates me, of course, back in 2005, the SEC chair, Christopher Cox, gave investment banks a license to up their leverage. In 2005, I remember a couple of people saying, this is not good. And a couple of years later...
What did we get? Financial crisis.
So you loosen regulation to a point where you really start to goose the economy, and then you're going to put the Fed in a tough spot because they're going to have to probably start thinking about, well, we're on hold, and they'll always say that, but at what point does the inflation numbers, if they do start to pick up, compel the Fed to start thinking maybe we're behind the curve? The bond market will jump a lot faster than the Fed.
I know I always go there, and maybe I'm stupid to do so, but I do wonder that if we have a higher rate environment, I think about the mortgage environment and so on and so forth, like, does it create some kind of strain on consumers? Like, everything's slowing down, and dare I say recession, and forgive me, I've only left you about 30 seconds.
Well, it's funny, I spoke to a bond manager on Friday, and I said, are you going to buy 10s and 30s next week, this week? And he said, I'd like to, because compared to highly priced equities, 10 years at 450 look okay, but then he said, I don't see the pain in the economy yet.
Yeah.
Until I see the pain in the economy, do I really want to stretch out and get 10-year paper? And I just think that's kind of what the bond market's kind of caught between here.
It's going to be interesting, no doubt about it. We'll be watching, certainly, what goes on in Wall Street, but we'll also be watching what goes on in Washington in a big way. Michael McKenzie, so much. Michael McKenzie, of course, keeping a watch on the rates market, the Treasury trade, the bond market, right here at Bloomberg. All right, that's going to do it for this hour of Bloomberg Business Week. For those of you watching on television, the close is coming your way in just a moment. Tim and I continuing, though, on Bloomberg Radio, on YouTube, and Bloomberg Originals. This is Bloomberg.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Peter King. Vice President Harris has completed the unenviable task of announcing this.
The votes for President of the United States are as follows.
Congress officially certifying Donald Trump's election victory over Harris. Here's correspondent Robert Costa.
It's important for American democracy and for the American people to see this unfold in real time, that the country is functioning, even at a time of deep political division.
Today's proceedings were a far cry from 4 years ago when hundreds of rioters stormed the Capitol. CBS's Scott McFarland.
As of today, there are now about 1,600 federal defendants, 1,000 of whom have admitted their crimes. They've pleaded guilty. About 600 of them are accused of assaulting and resisting police officers, and not just with their bare hands, but with bear spray, knives, flagpoles. There were guns brought by some of the rioters that day. One of them shot the gun outside the Capitol.
The insurrection is blamed for 5 deaths, including those of 3 Capitol police officers. Donald Trump has said that he would likely pardon some, if not all of those convicted. It's another wild winter day in much of the top half of the country. For example, Washington, D.C. and Maryland are seeing major snow. CBS's Ian Lee is in Clayton, Missouri, where wind is the problem now.
In the southern part of Missouri and Illinois, they're dealing with this ice buildup that's caused power outages. Thousands of people without power. Crews are working. And even though the storm has passed us, what officials are worried about right now is the wind causing the snowbanks to drift.
It feels like 28 degrees in Atlanta, but the bitter cold is not keeping people like DJ Bennett from paying their respects to former President Jimmy Carter.
He did a lot diplomatic work. He did a lot for humanity. I think his legacy as a real kind, gentle man would stand.
Carter's body remains at the Carter Center until tomorrow. A national tribute starts tomorrow night at the Capitol with a state funeral on Thursday. Jimmy Carter left office with the Iran hostage crisis almost over. There's renewed hope that Hamas hostages might be freed as Joe Biden's presidency ends. CBS's Cammie McCormick.
Blinken, traveling in Asia, said there's been a re-intensified engagement over the last couple of weeks, including by Hamas.
We very much want to bring this over the finish line in the next 2 weeks, the time that we have remaining. And we will work every minute of every day of those 2 weeks to try to get that to happen.
President-elect Trump has said there will be hell to pay if hostages held by Hamas are not freed before his inauguration on the 20th, now viewed in the region as an unofficial deadline for a deal.
Wall Street, the Dow is down 36, the NASDAQ up 170. This is CBS News.
Com.
How long have you been watching The Wheel? CBS's Steve Kathan says for many viewers it's half a century.
Wheel of Fortune premiered 50 years ago today in 1975. It was a daytime show at first with Chuck Woolery hosting.
Hey!
Yeah, there's a T. Pat Sajak took over in 1981. The evening syndicated show that's still around today launched in 1983. By then, Vanna White was on board.
By a vowel, an A.
Wheel of Fortune ranks as the longest-running syndicated game show in the U.S. with more than 8,000 episodes taped and aired. Steve Kathan, CBS News.
Disney says it will combine its Hulu and Fubo streaming services into one platform, still to be called Fubo yet. Both services will be available separately for those who only want one. I'm Peter King, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, everybody, we are 55 minutes away, just under 55 minutes away
Who's
from
counting?
the closing bell. I am.
Yeah, I know, me too.
From the closing bell on this Monday, January 6, 2025. Carol Massar along with Tim Stenivek live here on Bloomberg Business Week across our platforms, YouTube, radio, and of course, Bloomberg Originals. Yeah, we've got a rally underway, but I've got to point out we've now got the Dow Jones Industrial Average in the red, and we are definitely well off our highs of the session, Tim.
Yeah, Alex Semenova is standing by. We're going to talk to her in just a minute about these markets, why things are moving the way they are, and why we're seeing a little bit of a sell-off from today's rally a little earlier. Speaking of stocks, Carol, this one was up 800% last year. No, we are not talking about some AI darling.
No.
Mesoblast. We got the CEO on in just a minute.
Looking forward to talking to him. Lots of news out of the West Coast today as well. Disney merging Hulu and Live into Hulu Plus Live, I should say, into Fubo. And then you've also had the Golden Globes happening last night. Although I have to say, I watched and I was
What'd you think?
I was kind of bored. And it was just so many different programs because there's just so much stuff out there. Like the years past where it was certain series on a major network dominating or some of the early cable giants like dominating. It just...
How was Nikki Glaser?
I actually thought she was one of the
Did you
highlights.
see her jokes during the Tom Brady roast?
I've seen little snippets.
Are those allowed in the Massar household?
They're allowed.
I would imagine. I don't. That might be blocked in the Massar household. That thing was.
Why do you think? Oh, well. Oh, yeah.
Man, that was. Yeah.
We're all adults at home.
Okay.
We can watch.
Just making sure.
The puppies have to stay out of the room.
Hey, speaking of being adults, if you want to get Zen, you got to be an adult for that. 21 and older, actually. Are you as influencer?
I am not as influencer.
Okay.
But there are those that are.
We're going to explain what that is a little later in our program. They're fueling a risky nicotine hype cycle.
Yeah, a little worrisome to say the least. All right, we're going to get into that over the next couple of hours. Also, take you down to the close on this Monday. First up, though, let's get a check on that trading day and your top business stories. Here's Charlie Powell.
Hi, thank you very much indeed. 53 minutes to go ahead of the closing bell. We have got the Dow Jones Industrial Average lower right now. S&P, NASDAQ both holding on to gains. And we are brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. The offer does end March 31st. See if your company qualifies at oracle.com/Bloomberg. S&P down 27, right to the numbers here with the drop of just about 0.5%. The Dow lower by 0.1%. NASDAQ holding on to a gain of 1%. 10-year 4.60%. The 2-year 4.26%. Spot gold is little change right now, down 0.2%. West Texas Intermediate crude down 0.6%. WTI 73.47 a barrel. Bitcoin up 3.6% at $102,056 on Bitcoin. Investors, meanwhile, are seeking more clarity about incoming Trump administration policies. That, according to Liz Young-Thomas, the head of investment strategy at SoFi.
We baked in a lot of this optimism, but without policy clarity. So now we've gotten to a more rational level. We've had this little pullback. We ended the year on a bumpy note. We sort of started the year on a bumpy note because we know that we need more clarity. We need more answers in order to actually trade those stocks for the long term.
Liz Young-Thomas of SoFi interviewed this morning on Bloomberg Surveillance. NVIDIA shares higher ahead of that speech tonight by CEO Jensen Huang at the annual CES convention in Las Vegas. NVIDIA up now by 3.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. As Carol mentioned, seeing a little bit of momentum taken out of this rally. Stocks taking a real leg lower. The S&P 500 earlier was up by more than 1.3%, as we just heard from Charlie Pellet. Now up about 0.5%. The NASDAQ 100 up close to 1.8% earlier in the session, now just up about 0.8%. Watching it all unfold is Alexandra Semenova, equities reporter for Bloomberg News. She joins us here in the Bloomberg Interactive Brokers studio. What happened?
Hey guys, so I'm going to be honest, it's not surprising to see this lack of conviction in the market after 2 consecutive years of more than 20% returns for the S&P 500. That hasn't happened since the 1990s tech bubble, and so obviously valuations are very high, and that makes stocks pretty vulnerable right now to any kind of weakness. Traders, worry that there's not much room left in the rally. And
but wait, all those strategists putting out their numbers for 2025
that's also
were so
part of the
upbeat.
reason. When everyone gets bullish, it's reason for concern, and so there's a little bit of wariness right now on Wall Street, especially with no clear catalyst. We're waiting for earnings, we're waiting for clarity from the Trump administration on what policies they're going to put into effect. So this kind of back and forth trading is very likely.
You talked to the folks over at the JP Morgan Chase trading desk. What did they tell you about today's trade?
Yeah, so Andrew Tyler there, he's at the trading desk. He says that basically he wouldn't be surprised to see a 4 to 5% drop or even a 10% correction, but it doesn't change the bull case, which is that fundamentals are still good. Companies are still reporting earnings growth. There's, the economy is still robust. We're seeing above trend GDP growth, and that is still holding up the bull case for equities, even if we do see weakness. You remember, if you look back on history, it's pretty normal every few months to get a little bit of a pullback in stocks, and we've gotten so used to stocks just going up and up and up. So investors get a little bit concerned, maybe start profit taking when they see any kind of weakness.
5%, but when? That's the question. And also 5%, after 2 back-to-back years of more than 20%,
yeah,
5% isn't much.
It's not much, and I don't think anyone can exactly time it, but earnings season is definitely going to be volatile. One thing that he highlights is when companies are issuing their guidance, there might not be a lot of clarity because these firms are waiting themselves to hear what kind of policies are put into effect.
It's what we constantly kind of have heard over the last month
exactly.
or so since the election,
right? Even if we do get a strong earnings season, which we do anticipate, the guidance could be kind of a weak point for equity investors if they see companies a little bit, uncertain about the outlook.
What about the Mag 7? And when they are talking earnings, are they talking Mag 7 or are they talking everything?
Well, Mag 7 are going to be key here, and especially their profit deceleration. It's not that their earnings aren't going to be good. It's just that they're coming off of very challenging year-over-year comparisons. You remember they were coming out of that route in 2022, and so they were posting earnings growth of 34% in 2024, just enormous numbers. And so that is expected actually for that group to slow down to just 18% year-over-year earnings growth.
So good, but the comparisons are harder, right?
Measure, but they actually lag behind now expected growth for healthcare, and they're not much above materials and industrials. So for a group like that, that isn't that great.
Is anyone talking about equities outside the U.S. this year?
Yeah, so, there's a mixed picture on international equities. We've been talking so much on U.S. exceptionalism. That is, of course, contingent on the Magnificent Seven stocks. If those companies keep delivering on their AI promises, if we see, the expenditure, the monetize on all the money that they put into AI investments last year, then that story can continue. But if we do see weakness in the Mag 7, then investors could very well be looking at cheaper shares in other countries, particularly in Europe.
So you're not noticing, Alexandra, any kind of changing sentiment early in the year? I mean, we went from 5 consecutive down days for the S&P 500 and the NASDAQ 100. Then we had, it looked like, could be 2 days of gains now for the S&P 500. But again, no, it's just early in the year here. But anybody kind of, do you feel like in your conversations saying other than, okay, wait, we've got, we've had quite a run up, so of course you should expect to see some selling. Is there anybody starting to show a little bit more of a negative tone?
Yeah, I think there's an important distinction between the near term and the long term, which is, in the near term, I think there is a little bit more reticence after these seller returns that we've gotten, and especially as investors await earnings results until we get clarity on that, we could see some more profit taking from investors. But long term for 2025, so far the outlook still looks good. If we don't get any kind of inflation surprise or any kind of negative economic print, for the most part, the bull case is still intact.
What's the political risk here? I mean, as Carol mentioned, as you mentioned, I think a lot of investors are waiting to see what happens with the Trump administration. But what's the big risk here?
Yeah, I mean, that, the political risk is obviously the big risk. Sam Potter did an amazing big take on,
We had Sam on.
Trump was kind of, the person that everyone is mentioning in their year ahead outlooks. And his policies are expected to be really, reflationary, tariffs, mass deportations that could weigh on companies, that could spike up their costs. So that's kind of the thing that investors are worried about. Obviously, yields have been on the rise, and the environment right now with Trump coming in is much different than it was in 2016. Back then, we had economic weakness, stocks were down, so we needed that growth catalyst. We needed policies that are inflationary, but you're coming into a time in markets where yields are rising. Inflation has been an issue, so those policies may not work the way that they did back then. It may not be the catalyst for stocks.
As you take stock of the market every morning when you're coming in, and I'm thinking about kind of the trajectory since the U.S. presidential election, where we saw quite a rally in a lot of names, and then we've seen a little bit of a pullback. But I am curious, as you take stock every morning, what's top of mind when you're reading in and you're looking at stories and kind of looking at some of the trade or some of the corporate and business stories that are coming out? What's top of mind for you?
Yeah, I think it's a culmination of things. Obviously, looking at how the technology sector is performing, that's so important because it comprises such a big part of the market, and seeing if there's any kind of sector rotational shifts, which has obviously been happening. That is one of the risks to this rally. Obviously, a rotation would be a good thing, but it may come at the expense of the Mag 7, which would come at the expense of the index. And a lot of investors going into next year were saying that this is going to be a stock picker's market, that just riding the S&P 500 may not necessarily work the way that it did for the past 2 years. That
Tim
you
and I are
actually
laughing because it feels like
everybody explore.
It's like you could. I've been doing this with Carol for 4 years, and we've been hearing every year. Here's what we hear every year: stock picker's market. Value's coming back.
Right, exactly. Oh, and maybe it's time to start looking overseas.
Internationally, yeah.
And I was going to say, exactly, we've heard that the last 2 years. People were warning us about the S&P 500 when its multiple was at 17 times earnings, and now we've reached 23 times earnings, and people are still, we've gotten that far, and people have gotten tremendous returns.
When you think about earnings, though, coming our way, and bank stocks in particular, right, that are just coming our way in a couple of weeks here, JP Morgan leading it off, I believe on a Wednesday morning, that is, I don't know, that is always a great indicator of how the bank CEOs and the banks in particular, what we're seeing in terms of their different business segments, but also how they feel about the outlook. Again, could that be something that tells us a little bit more about the overall market outlook?
Yeah, certainly. They're kind of like the unofficial curtain raiser for the earnings season generally, and obviously their guidance, their outlook on the economy is incredibly important. Obviously, when Jamie Dimon speaks, everyone tunes in. He always has a good check on what's going on. But the general expectation right now is that they should be fairly positive, especially with Trump policies for deregulation. That's supposed to bode very well for banks, and so that could very well be baked into their outlooks and what they're talking about during their earnings calls.
And they probably, are going to like that maybe rates stay a little bit higher, right?
Exactly, that is good for them.
I do wonder what's been priced in, though, Carol, at this point.
No, it's fair.
Given the run-up that we saw post-election.
Yeah, I don't think you're wrong about that. I think the biggest thing is, and this is something that we've talked about so much, is that everybody, like you said, that Sam Potter piece, it all comes down to the president-elect. And ultimately, even today, the tariff story that, okay, maybe it won't be as onerous as everybody anticipated, and then the president-elect coming out and saying, no, the reports are not true. And so, again, until we know the reality of his policies and what the impact it will be on the market environment and companies in particular, it's going to be kind of a, wait and see.
Very little conviction market. As we're seeing today, we could very well see some moves that are to the upside and then back down and kind of go nowhere for a while.
It's a really good point. Thank you so much. Great overview. Let's try that again. Great overview. Let's say it together. Alexandra Semenova keeps it at watch on the equity universe for us here at Bloomberg. I'm Carol Massar along with Tim Stenbeck.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average at the low of the day, down 0.2%. The S&P, NASDAQ 100 index, all holding on to gains. S&P right now up 26. That is a gain of 0.4%. NASDAQ is up 205, higher now by 1%. The NASDAQ 100 index up by 0.9%. And the Russell 2000 index of small cap shares just turning lower. It is down by 0.1%. Again, to put it all in context, the S&P up by 0.4%. The 10-year, 4.61%. The 2-year yield, 4.27%. Gold lower by 0.2%, 26.34 the ounce. West Texas Intermediate crude oil down 0.7%, 73.48 a barrel. And Bitcoin now above $102,000, up right now by 3.8%. So what about the U.S. market backdrop? Lori Calvasina is head of U.S. equity strategy at RBC Capital Markets.
Look, I think a lot of people want this market to broaden out. You can count myself in that camp. That being said, I think we have to understand why we have had so many head fakes so far, and it is simply because the value part of the market, the rest of the S&P, whatever you want to call it, has just not put up superior earnings growth.
Calvasina was interviewed this morning on Bloomberg Surveillance. Nippon Steel and U.S. Steel have jointly filed lawsuits in a last-ditch effort to preserve the planned merger of the companies, which was blocked last week by President Biden. U.S. Steel shares, they are now up by 7.6%. ADRs of Nippon Steel down by 1.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, the company closed out last year with a stock price increase of 800%. No, we are not talking about any AI darling here. It's a biomedical services company, Mesoblast, which develops drugs for cardiovascular disease, oncology, hematology, and more. The company based in Australia, but it's got a market cap of about $2.2 billion. Shares of the company's ADRs, Carol, that trade in the U.S. are up more than 50% since mid-December after the company's Ryoncil got FDA okay for pediatric graft versus host.
It's a big development. Dr. Silviu Itescu is Chief Executive Officer and Managing Director at Mesoblast, and he joins us in our Bloomberg Interactive Brokers studio. So nice to have you here. Welcome, welcome. You founded the company back in 2004, so over 20 years ago. Tell us a little bit about this journey and where we are today and how significant this development is for you.
Thanks for having me. Look, Ryoncil is the first ever FDA-approved adult cell therapy, regenerative medicine cell therapy in the United States. It has taken us 20 years to get to this point, but that's just how long it takes to develop and commercialize a brand new medicines in a new class of therapies. It's the first adult stem cell product off the shelf. It's been approved for children with a devastating complication called graft versus host disease, which is a complication that occurs in about 50% of children who have a bone marrow transplant after they've been cured of their leukemia. And as many as 70 to 90% of children die from this disease. There are no other approved therapies. And in our phase 3 trial, we showed that we had 70% achieved a response rate as early as day 28. And overall survival over a 5-year period is seen in 50% of children, which is a remarkable outcome, meaning that about 50% of children are effectively cured.
Wow. You know, this is going to sound so off taste a little bit, because when you talk about market size of a potential drug or development, if you have a child who has this, having one as a market size is enough, right? To have a development like this, because it's a game changer potentially. But having said that, you know, you are a publicly held company, you're a small cap company, and or a smaller market cap company. And I do wonder about the run-up. What is the potential market size for a drug, this particular drug?
So this is the first indication for this particular drug. It has many applications, and we will be developing it for other adult indications. Fundamentally, it addresses major inflammatory diseases.
Which is so many diseases.
Many diseases.
Right.
Inflammatory lung disease, inflammatory bowel disease like Crohn's and ulcerative colitis.
Right.
And that's adults. There are many pediatric inflammatory diseases that are not well addressed either. So this is the first of its kind. It's taken a number of years we've now demonstrated that we understand what the FDA is looking for in terms of regulatory milestones, in terms of manufacturing, in terms of consistency, in terms of reproducibility, so that we can now show that every vial that goes out is the same as the one before. And so we have a product that we can show that it's effective and it's safe and it's reproducible. And I think that has a fundamental value proposition, and that's why we're the first to have been approved.
So how does it work? What were you able to find? What did you and the team discover that makes this work?
So inflammation is caused by many pathways of the immune system. And traditional medicines, small molecules or monoclonal antibodies, target individual pathways. And that's why they're not really very effective at turning off severe inflammation. And COVID-ARDS, for example, was an example of severe inflammatory cytokine storm. Yeah. And what we've shown is that our cells, which are living packages of multiple factors that orchestrate an anti-inflammatory response, are able to turn off a multi-pronged immune response in a way that small molecules cannot. And that's why we achieved such a significant outcome in these children who otherwise have a fatal disorder. But that is the mechanism by which these cells generally will act in these other diseases. So it's the tip of the iceberg. For us, this product is, of course, it's life-saving, but it's also has a halo effect because it demonstrates that the FDA is working with us, understands that we understand the mechanism and that we can rise to a threshold as a benchmark, if you like, for how cell therapies need to be developed, manufactured, and ultimately brought to the market. And so the market opportunities are very large. You mentioned earlier that our...
So easily you are assuming or guessing that it's going to be $1 billion plus drug.
Oh, for this indication, yes, definitely.
Just for this indication?
But just for this indication. But we have phase 3 assets now that are either have completed or are in completion for cardiovascular disease and inflammatory back pain. And those have multi-billion-dollar potential.
It's interesting because I actually have a sister who's been involved. She's a nurse and she's an engineer and she's been involved in the world of cancer for a long time. And increasingly the conversations I have with her is, how we are finding out that inflammation causes so much, whether it's cancer or otherwise, right? So much that ails us. Having said that, I'm curious when you're dealing with stem cells, anybody's stem cells are used to create this? Like, how is it actually made? And I'm just curious, does each drug have to be very specific to the individual using their own stem cells?
This is a very important question that you raise. Now, actually, these are unique type of cells. They're called mesenchymal stromal cells that have a unique property that they're not recognized as foreign when they're treated from one individual to another. And they have the other very important characteristic that they can be expanded in very large numbers through the culture manufacturing process. So we start with a tiny number of very highly purified, concentrated cells from a given donor, an FDA approved donor screening program.
Would that be an embryo?
No. These are all adults. This is from young, healthy 18 to 24-year-old adults.
Yeah.
Screened. We take a little bit of their bone marrow and isolate these cells, purify them, and then under GMP, good manufacturing practice facilities, we manufacture them, we scale them up, and we can make thousands of therapeutic doses from one donation. They're frozen, they're cryopreserved, and through a supply chain, we ship them from the manufacturing site to our distributor that warehouses them effectively at minus 140 degrees, and then they're shipped to the hospital. And
no rejection.
There's no rejection. There's minimal side effects, if any. Very safe, very effective, and they're an industrial way of making therapeutic stem cells in a vial, where every vial is exactly the same as the vial before. And we can show it's the same, it's potent. We have potency assays that allow us to quality control every vial that goes out the door.
How do you find the donors?
Young, healthy volunteers. We screen them for any potential diseases.
Is there any sort of, when you're doing this for a for-profit company, Is there any sort of compensation that they get, or is that not allowed?
No, it is allowed. It's totally allowed, and they do get compensation, and they're fairly compensated. It's no different than many other blood products that are also donated, plasma, derived products, etc.
What does this drug cost?
Well, you know, we only got approval a couple of weeks ago, so we're right in the process of working with all the major payers.
But you're smart. I'm sure you guys have looked at this.
Yeah, look, the way to look at this is there are a number of gene therapies that have recently been approved.
Yeah.
Those gene therapies give you, at best, 50% cure rates. We've now done 5-year survival studies in the children from our phase 3 trial, and we get about a 50% complete response and survival out to 5 years, which effectively means cure rates. So I would say that we're in the same sort of ballpark as the gene therapy approach.
Which is what? No, this is no judgment. Just like,
we have no idea.
Our audience loves to understand.
I'll look at this in a different way. We save hospitals about $1 million in effectiveness of what they have to spend on patients in the intensive care unit, and that's, you know, putting it in a very calculated way. It's separately from the fact that we're saving children's lives. So when you look at it that way, I think if you save $1 million in healthcare, then you can justify pricing in that order of magnitude.
Pricing around $1 million?
We haven't yet gotten those prices, but we're in discussions with various payers.
Because gene therapy treatments can cost between hundreds of thousands of dollars and several $1 million per treatment. This isn't judgy. It's just like trying to understand the marketplace. And again, if I have a child and it's...
the cost doesn't matter.
It doesn't matter.
I would expect all costs incurred for this treatment, for this disease, are going to be reimbursed by all the major healthcare players.
Be.
Absolutely.
How do you know that?
Well, we've had already multiple conversations with all the major insurers, and we've been welcomed. The data supports what I'm saying.
FDA approval, obviously a huge deal, but what about outside the U.S.?
We already have, through a partnership in Japan, this similar product to this has been already in use for the last 5 years. It's safe, it's effective, it generates a sustainable revenue stream. Beyond Japan, we will be looking at Europe in due course, but our primary focus is the US, without doubt.
Just real quickly, so I don't know, take me 6 months, 12 months, 3 years. What might this replace as a current treatment for whatever ailments? Like, how are you thinking about it?
So for this disease, GVHD, there are no approved treatments.
But for other, as you branch out.
So our other 2 big areas that we're focusing on are inflammatory disease and heart failure.
Okay, which you
And
mentioned.
we've completed a large phase 3 trial of more than 500 patients, published in some major cardiovascular journals. And what we've shown is, surprisingly, an 80 to 90% reduction over a 3-year period in heart attacks and strokes and mortality in patients who have the highest risk for those factors, on top of already taking all the various drugs that are available for heart failure. In addition, we've also recently published a study in children with congenital heart disease, where a single injection of our cells into the left ventricle has almost doubled the size of the left ventricle, which allows the surgeon a whole different approach to an outcome.
Stay in touch. We'd love to hear more.
Terrific.
As
Thank
the
you
year
very much
progresses.
for having me.
Dr. Silviu Itescu, Chief Executive Officer, Managing Director of Mesoblast, joining us right here in studios. You are listening to Bloomberg Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow lower, the S&P NASDAQ. They are both higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading well off their session highs, with the Dow now down 48 points. It was up 383. S&Ps are higher by 28, while the NASDAQ is still up 1.1%. The U.S. 10-year yield of 4.61%. Gold is down 7. Oil trading in the red. And Bitcoin, that's higher by 3.8% and is back above 102,000. Among the main 11 S&P sectors, leaders were tech and telecom. Consumer staples were under pressure. And leaders to the upside in the Dow, NVIDIA and Amazon, while Procter & Gamble fell 2.7% and led to the downside. In deal news, Paychex is said to be in talks to buy Paycor. And wrapping things up, Fubo TV soared as much as 268% on a streaming deal with Disney. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And a federal judge in New York says Rudy Giuliani is in contempt of court for failing to properly respond to requests for information as he turned over assets to satisfy a $148 million defamation judgment granted to 2 Georgia election workers. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. 18 minutes to go until we wrap up the Monday trade. Definitely off our best levels of the session. In fact, the Dow a little bit in the red here, but you're still looking at a gain of about more than 200 points. You heard that from Charlie and Bill Maloney. Up about 1% on that NASDAQ 100, just up about 0.5% on the S&P 500. But there is a lot coming at investors and a lot more to come this week in terms of economic news, Fed minutes, so strap in, everybody.
I mean, we started this first Monday of 2025 with quite a bit of news. President-elect Donald Trump denying that Washington Post report that his aides are considering narrowing his tariff plan so that it would only apply to limited specific critical imports. Carol, our next guest says that tariffs from China could pose a big risk to the economy if they're actually implemented.
No, it's a really important point. Time for our Drive to the Close guest. With us is Tony Roth. He's Chief Investment Officer at Wilmington Trust, and he joins us from the greater Philadelphia area, of course, in the great state of Pennsylvania. Hey, Tony, good to have you here with us. Timely guest to have on since we've been so focused about what may or may not be when it comes to the President-elect's tariff plans. Talk to us, though, specifically about tariffs from China and the risk to the economy.
Well, if we have an amount of incremental tariffs, Carol, that equaled the amount that we had with the first Trump presidency, it would be about $50 billion of incremental revenue. But if we had an amount, and that's not a lot, by the way, and it's not a lot of tariffs. On the other hand, if we had an amount of tariffs that was consistent with what the president has described, we would see total imports from China drop from currently 14% of total imports to probably over the course of his presidency to 5% of total imports. And we would see a very significant increase in CPI over a one-year basis. It would not constitute structural inflation. So it would happen one time as these tariffs took hold. When they took hold, it probably takes some time for tariffs of that significance to take hold. But because those tariffs would be so large, if in fact they happened along the lines that the former president has described, we would see a pretty significant impact to GDP to the point where we could even have a recession. And because our baseline is for only around 1.7, 1.8% growth for this year, which is lower than the overall street. So there's not as much margin for the economy, in our view, as the street thinks. And if, in fact, the president goes that hard on these tariffs, you could really see that inflationary impact on the economy, on consumers, and you could see the economy slide into recession.
We've spoken to some guests over the past couple of months after the president-elect won in November, who reminded us that the tariffs that the former president wanted to put into place during his first term, when he said it, the tariffs were implemented, i.e. what he says goes when it comes to tariffs. Is the market taking into account the full risk of tariffs here?
Clearly, they're not taking the full risk if the measure is what he's described in this election, which is to say 100% tariffs on China, up to 25% tariffs on most of our other trading partners. That's not remotely taken into account. I think that the dynamic that we saw, however, in the market today is a microcosm for what we're going to experience over the course of at least the first half of the year, which is to say you're going to see this president act as a negotiator. He's not going to want to give up any of his leverage. And so when stories come out that suggest perhaps in practice he recognizes the risk to economic growth and inflation that tariffs could pose, he's going to push back hard on that, and that's going to cause volatility in the markets, much like we saw today. And so while the markets are not pricing in the degree of tariffs that he's talked about, probably aptly so, because the degree of tariffs that he's talked about this time around are so much greater than they were the first term. It's very unlikely that he would, in fact, move to implement tariffs of that scale.
However, it is also an individual, the president-elect, that watches the financial markets pretty closely, and he doesn't necessarily, or at least many have told us, doesn't want to see them fall apart on his watch. So how might that be a bit of a checks and balances in terms of Trump policy? It's not like he's looking to get reelected at the end of this term.
Yeah, that's a really great point. And what I would say is I would keep a very close eye on the 10-year yield, because right now we're around 460, maybe a little bit less this time of day. We were over 460 earlier today. But the 10-year is really a great proxy for how the markets are viewing the overall economic program from this new administration. And if we move to a level that starts getting into the 4.75 to 5% range, that's going to really scare this president, and it's going to really cause the president to pull back on whatever it is that may be causing bond yields to rise in that direction. Likely, probably in excess of fiscal spending, an increase in the deficit, so on and so forth. The bond vigilantes come out, and onward from there. It's going to be inflationary, and it's going to cause the Fed to not, in fact, be able to lower rates further from here. And so I think that, yes, he's going to be sensitive to the stock market, but he's also going to be a lot more sensitive to the bond market than he has been in the past as well, given that we have this scenario now where if the long-term bond goes much above where it is today, you're going to have a crushing impact on the deficit.
And you are definitely seeing a bifurcation between like the 2 and the 10 right now in terms of expectations. I just want to kind of follow up. While the president-elect doesn't necessarily look to get reelected, folks in Congress will look to get reelected. And so they're not going to want policies that maybe, kill markets or kill the economy. So it's just something, Tim, for us to keep on our
That's a good point. Hey, Tony, one thing I didn't hear you say in terms of risks was anything related to mass deportations or immigration policy and sort of what that does or what that could do to the economy. How are you looking at that?
Yeah, it's a great point. In fact, we just came out with we're coming out with our outlook for the year tomorrow, in fact, called Investing in a Chutes and Ladders Economy. And the basic idea is that we're in an environment where we're moving gradually upwards. We do have a baseline forecast of around 1 3/4% for growth, but there are these idea of these long shoots you could hit if you get these big tariffs. I would say that the shoot for the immigration scenario is probably not as great, because we have a baseline forecast in any event to see unemployment move upwards this year to around 4.7%. And immigration is going to take, notwithstanding all of the noise around immigrating millions of people, deporting millions of people, it's going to take some time for that to all take effect. And we're in an environment right now where the labor market's not doing so great. So I don't think that the immigration for 2025 anyway, or the deportation issues, are going to present the biggest shoot. I think the biggest shoot is really going to be around the tariff issue that we've already covered. Although I certainly would keep an eye on that deportation issue as we get into get closer to next year. And as we get into potentially a stronger economic cycle again.
No, you're right. And there's a lot of employers who say we need these workers. I'm going to leave it there. Tony, thank you so much. Tony Roth, Chief Investment Officer at Wilmington Trust. Do you want to mention, we do have a headline crossing the Bloomberg, Stryker nearing a deal to buy Inari Medical. This is coming from Reuters. I'm looking at Inari Medical. Ticker is NARI, and that stock up as much as 30%, still about a 26% gain as we speak.
Stryker down about 0.1%, not moving too much after this news.
This is Bloomberg Business Week with Carol Massar and Tim Stenovac on Bloomberg Radio.
All right, everybody, just under 7 minutes to go, and we're going to wrap up the trading day. We're going to head over to our Bloomberg TV colleagues, talk about the trade today, and bring you to the closing bell. In the meantime, we are checking out what we like to do, the most read stories on the Bloomberg terminal.
Okay, so CES is underway right now.
Yes.
Formerly known as the Consumer Electronics Show in Las Vegas.
It's not called that anymore.
Is it not called that? Is it just CES now?
I don't know. I felt like when I said Consumer Electronics Show, people were going to be like, no, CES.
Yeah,
CES.
they branded it as CES. Everything is CES, presented by the Consumer Technology Association.
It's a lot of auto now. It's a lot of AI this year.
Yeah, it's not just TVs and...
Not anymore. It hasn't been for a while, right?
TVs and stereos anymore, right?
Cell phones, right?
You've been to it before, right?
I have. It's been a while.
It's kind of nuts. Just to give you an idea of the last time I went, no Uber or Lyft was allowed in Las Vegas when I was there. And I went 2 or 3 years in a row.
I just remember when I went, there was a whole wing that was just like Microsoft Windows wing.
Yeah.
And
it's not like that anymore.
No, it's a lot different. Where do you want to go?
So I want to go to the reason I'm saying that is because you're getting a lot of announcements from computer companies. Okay. Dell, for example, out with a big announcement. The company rebranding its PCs in a manner reminiscent of Apple's naming conventions in an effort by the computer maker to spur demand. So this is interesting because I've never understood the way Dell makes products and names products.
Yeah.
Decades-old product names such as XPS and Inspiron will be killed in favor of simplified branding around the word Dell in its new generation of devices, the company said Monday ahead of CES.
A new tiered system featuring the Dell name.
So, what is it going to be like? Dell 1, Dell 2,
it's
Dell 3?
It's very Apple-like, isn't it?
It's very Apple-like.
Well, it's so funny. We just...
Dell Pro, Dell Pro Max. Where did Dell Pro... Hold on. Dell Pro, Dell Pro Max.
I can't wait till the comedians get a hold of this. Yeah, exactly. Rebranding, as you said, part of Dell's effort to spur demand in the stagnant PC market. The company touting AI-optimized systems and the end of support for Windows 10 as catalyst for new purchases. This is what we talked about with Ian King, who follows the networking and semiconductor space. But what is it that makes somebody go out and buy a new PC? And it's got to be something more interesting than maybe a battery. I think he was talking about Intel specifically, right? A battery that maybe has a longer life that isn't necessarily going to get you to go out and buy a whole new PC or laptop.
Okay, so if you're thinking to yourself, it sounds like Apple, you're not the only one.
Although my daughter tries to do that. She's like, my battery's dying. You guys, it's not working. I need a new laptop.
That's what she says. Can you replace the battery?
Yeah, sometimes you do, but sometimes, yeah.
The Jeff Clark, the chief operating officer at Dell, he gave us press briefing to reporters. And one of the people in the audience said, quote, "I'm wondering why you guys didn't choose something original because you essentially have Apple's branding here. Your branding sounds a lot like Apple. Aren't you just following them?" Dell executives defended the choice, saying nobody owns words like Pro or Max. The decisions were supported by research with tens of thousands of customers. This according to Jeff Clark, the COO over at Dell.
Yeah, it's interesting. All right.
I'm the Tim Pro Max.
Tough crowd, man.
Hey,
tough crowd.
It's CES. That's what happens.
I will just, on Dell's behalf, Alienware, which is the brand of gaming-focused PCs Dell acquired back in 2006, is exempt from the renaming. Many of the new Dell-branded devices will include neural processing units, chips optimized for artificial intelligence tasks, according to the company's VP of Dell's PC business in this interview. So, yeah. Listen, get ready. We've got Jensen Huang of NVIDIA. He's going to be giving a speech tonight. This is probably one of the most closely watched conversations or speeches.
Talk about a good keynote.
I know, right?
Yeah.
9:30 p.m., folks. So get in your jammies and listen up.
Will he be wearing the leather jacket?
I'm assuming yes. And if he isn't, maybe that's a sign.
Very cool. I'm going to be watching that too.
Yeah. Listen, there'll be a bunch of headlines, and I'm sure we're going to be talking about it, or could be potentially. He said, what did Ian say? That this is when he likes to announce new products. So we'll be looking for stuff like that. We'll see what happens. In the meantime, folks, we just have a couple of minutes left in today's trading session. I'm taking a look at the trade, and we are definitely just off our worst levels of the session. So a little bit of bump off the bottom, but definitely well off the earlier rally that we saw in the session. The NASDAQ 100 holding on to just about a 1% gain, and you've got the S&P 500 a gain of about 0.5%. Do not go anywhere. Over to our TV colleagues we go. Tim and I chatting you down, and the whole team right here. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, I think I'm still here with Alex Steele. She might have left. But we are going to take you through the closing bells with our global simulcast. It starts right now. Scarlett Fu in the TV studio, Carol Massar and Tim Stenovic in the radio booth as we welcome our audiences across all of our Bloomberg platforms to parse the most crucial moments of the day. We were sitting on a pretty massive two-day rally, Carol Massar, but the second day of that rally fading just a little bit as we get closer to the close.
Yeah, I thought it was going to be a two-day bounce back, right, following off of Friday's rally, but not to be. And maybe some confusion over what we're going to get in terms of Trump tariffs. Maybe people are just waiting. We have a lot of jobs data, economic data, Fed minutes coming our way, so maybe people are just waiting.
How have you guys not talked about Bitcoin?
We did. Romaine did.
Okay, good.
Do you
He
not watch our
delivered.
show?
He does not watch.
What have you been doing for the past hour?
For the past
3-hour
two
show.
hours. For the past 2 hours.
Oh, okay.
Bitcoin back above $100,000. 102,000 right now, up another 3.7% today. See if we see some new highs. Maybe ahead of Bloomberg Crypto tomorrow.
Oh,
noon.
look, shameless
Look
tease.
at that, shameless plug there.
You got it.
Let's not forget also NVIDIA was a big gainer in earlier trading and gaining as much as 5.3%. It's paired its advances as well. Jensen Huang going to be speaking at CES in Las Vegas. What is he going to say about Blackwell, the next-gen AI chip that everyone has put so much of their hopes on AI on?
And also, you already saw NVIDIA kind of rally today. You have the chips index doing pretty well, SOX index doing well. NVIDIA, the outperformer there. Is that already baked in at this point? And is it going to be a show-me story today at CES?
Yeah, absolutely. Though there's some folks, some analysts on the street, of course, a little concerned here about when we see the payoff in AI, that downgrade earlier today for some of the software companies like Salesforce and Palo Alto over at Guggenheim because of concern that the payoff for AI might not actually materialize for some of those companies on a revenue and profit basis. We get the closing bells in New York. A little bit of reason to cheer. The S&P off the highs of the day. It's going to close back below 6,000, but it's still higher on the day by about 30 points or 0.6%. The NASDAQ composite higher by about 1.2% on the day, or about 240 points. The Dow Jones Industrial Average and the Russell 2000, those are your outliers, each lower on the day by only by a fraction of a percent, each down about 0.1% on the day.
All right, back to the big caps, the S&P 500, guys. Not quite an even split, but pretty close to it. Scarlett, you've got 232 names to the upside, 268 to the downside.
All right, let's take a look at the IMAP, which shows the breakdown by economic sectors. And you have 4 sectors in the green: communication services, infotech, and materials leading the way. Infotech up 1.4%, communication services gaining more than 2%. On the flip side, your laggards include real estate investment trusts and utilities, each losing about 1%. Consumer staples also down by almost 1%.
All right, a fair amount of green there. And Scarlett, you really kind of teed up my gainers today because you have the Philadelphia Semiconductor Index, folks, well off its highs, at its highs up about 4.2% in the Monday trade, but finishing the day just up about 2.8%. You had NVIDIA's server assembly partner, Foxconn, coming out, and they reported faster than expected revenue growth on continuing demand for AI infrastructure. So that really kind of helped give some enthusiasm and juice the overall sector. So on that, kind of staying with that trend, NVIDIA, as we talked about earlier, at its highs, up more than 5% in today's session. And we do see a new record when it comes to NVIDIA, so topping that peak that we saw back in November, finishing the day, though, with a gain of about 3.4%. Jensen Huang is expected to give his speech from CES in Vegas. That's 9:30 p.m. Wall Street time, so 6:30 p.m. local. So we'll be looking for anything he has to say about new products. So that will certainly be something to keep a eye on. And Supermicro Computer, number 2 gainer in the S&P 500, guys, up more than 9% in today's session. Lynx Equity Strategies writes that address from Jensen Huang at CES could be a positive catalyst for the stock. So something to keep an eye on. Certainly NVIDIA, but really that overall space. And I should point out, Stryker nearing a deal to buy Inari Medical. This is something that happened late days. Reuters reporting this, and Inari Medical was up about 30% at its highs, so kicking up higher on that news.
All right, Carol with the gainers. I got the decliners. I do want to start with ADRs of Tencent Holdings Limited, falling today by more than 7.8%. This after the Defense Department said the tech firm was a Chinese military business operating in the U.S. Tencent, among several companies that were labeled as Chinese military entities in a Federal Register filing. Now, this blacklist from the Pentagon doesn't in and of itself carry specific sanctions, but what it does is it tends to discourage U.S. firms from trading with entities on that list. In a statement, Tencent said its presence on the list was clearly a mistake. We are, quote, not a military company or supplier, a company spokesperson said. And paychecks down today by 2.6%. They fell after the company reported that the payroll processing company is in advanced talks to acquire Paycor HCM. A deal could be announced as soon as this week, according to people with knowledge of the matter. Paycor shares, by the way, jumping more than 20% in today's session. And finally, rounding it out with Palo Alto Networks, shares fell today by about 2%. This after Guggenheim Securities cut the recommendation to sell from neutral. Price target set to $130, a 29% decrease from closing yesterday.
I gotta say, guys, some of the action was most definitely within the bond market. So I'm taking a look at where we ended. You're looking at the long end up by about 2-3 basis points. The front end saw a little bit of buying, but we had a 3-year auction and it really wasn't that awesome at the end of the day. You had indirect bidders were not great. The lowest in about 3 months. Yes, the bid to cover was strong, highest in September, but it was the dealers and direct bidders that had to pick up all that slack. We don't love that. And that's headed into the 10-year auction tomorrow. 30-year on Wednesday. We get $39 billion tomorrow. That's, I think, going to be really interesting, particularly if we're talking about 5% yields in the 30-year, 4.5% on the 10-year, or past that. But that's going to be interesting.
Yeah, Michael McKenzie was on earlier talking about some of the auctions this week and saying, you know, especially when you're looking at longer term, investors want to be paid to make those bets longer term. All right. To some of the stories that are on our radar. And I know everybody's been talking about the congestion pricing that kicked off in New York City. It makes us think a lot about mass transportation. For any of us who take it, we all do, I think it's safe to say. New York City subway, not a great year. Violence. It's one of the most dangerous years on records, 2024. And so we're just seeing violent incidents. I mean, just look at the headlines. I feel like over the last couple of weeks, it's been pretty rough for anybody who's riding the New York subways.
Yeah, Catherine Wild, who runs the Partnership for New York City, it's a business group made up of the city's largest companies, J.P. Morgan Chase, Goldman Sachs, and more, says that the MTA is going to have to spend more to improve safety on trains. I wonder if that will happen as a result of congestion pricing, which kicked off yesterday. But it sort of remains to be seen. There's this tension with getting people back to work, filling up offices, and making sure that people feel safe on their commute.
Well, that's what I'm curious about. I mean, half the point of the congestion pricing was to funnel that money to make improvements to the MTA, both in terms of security and other things as well. And I know they've tried to make some improvements since the pandemic, and I mean, I've noticed a few, but, you know, it's a pretty sprawling network. I mean, I don't know. I mean, how much can you do beyond what's already been done?
Well, also, isn't it all relative? Like, if you grew up in New York in the 70s, this is so much better. But, like, it's still violent, so it's like, what, you know, isn't it a relative basis?
What's troubling for a lot of people is just how random it is. In a lot of cities around the world where they're really not great neighborhoods, you know what to avoid, you know how to stay safe. But if you're taking the subway, and it could happen in any subway station, then it just feels like you have no control over the situation at all.
All right, there's actually some breaking news right now on Ulta Beauty. The CEO set to retire. The company out with a statement announcing the CEO transition, saying that Dave Kimball will retire as Chief Executive Officer after 11 years with the company. Right now, Keisha Steelman, who's the President and Chief Operating Officer, will succeed Dave Kimball as President and Chief Executive Officer. That is in effect today, January 6, 2025. There you have it. Ulta CEO retiring after 11 years. The COO now is going to be the CEO starting today.
You know, another story that we're paying a lot of attention to, of course, is the idea that talent is hard to get. And when you do have it, you want to hold on to it for as long as possible. Citadel, the hedge fund run by Ken Griffin, has extended its non-compete agreements for some of its portfolio managers to 21 months, which is way longer than a lot of its
rivals. Can I ask a question? Is this just garden leave?
No.
So this is different than garden leave. So you don't get paid for these 21 months while you're just waiting around to switch jobs? We don't know.
Well, I bet the company that's hiring you would have to account for you not getting paid during that time, right?
That's a good point.
So then the new
there's got to
be something. I mean, because if you're losing pay for 21 months, like there's going to be some kind of backlash on that.
You're out of the game. You're not like keeping up to date with stuff.
Yeah.
I guess.
Hey, can I pivot to other breaking news?
Yes,
please. Meta. You remember Dana White?
Yeah.
He's now going to be on the Meta Platform's board.
That's interesting.
Wow.
So UFC CEO Dana White being added to the board over at Meta Platform. In fact, 3 new directors being added to the board, including Charlie Songhurst and John Elkin. But probably the name that's going to get the most attention is Dana White, who, of course, runs the Mixed Martial Arts League, UFC.
And didn't they just change their head of policy as well, right? From Nick Clegg to Joel Klein, who's the Republican.
Yeah, you see what's going on.
The resident Republican in the company.
And Dana White, of course, kind of the resident Trump friend, buddy, if you will. He has a long-standing relationship with the president-elect. So.
Mark Zuckerberg's made a couple of trips over to Mar-a-Lago as well.
I've heard, yeah. Is that going to pull you back onto Instagram, the metaverse, whatever he's got going these days?
The metaverse?
Oh,
Who
them?
talks
I
about
don't
the
know.
metaverse these days?
Mark Zuckerberg, I don't know.
But he probably hopes to avoid all the ire from Mar-a-Lago, though, that's for sure.
Yeah.
It's going to be interesting, guys. It's going to be interesting. All right, that's a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We call it Closing Bell. We'll see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Massar. I'm Tim Stenovec. Lots of news in the world of media and entertainment today, Carol. Walt Disney and the streaming provider Fubo TV agreeing to combine their online live TV businesses. It creates the second biggest digital pay TV provider. With a combined 6.2 million subscribers in North America, the new venture will trail only YouTube TV. The deal does not include Hulu's subscription video business, so where I think I was watching Shogun or whatever, I won't have to worry about any changes there. But Michelle Davis, who's senior M&A reporter for Bloomberg News, is going to give us the details here. There's a branding issue here in terms of what consumers understand. Like, I was a little confused by this, I got to be honest. Also because I don't understand what Fubo TV is.
And I feel like anytime you throw Hulu in it, that's been like tossed around, I feel like, for a while too, right?
Disney, who owns it?
Help us.
Yeah, well, so Fubo is a very sports-focused platform, and it's basically taking the cable bundle, but just having it available online for people who don't want to have cable. And so that's probably why you may not have heard about it, because it's the smallest one of those.
So it is a competitor to YouTube TV, or it's more niche than that? Does it have everything you'd want?
Yeah, it's more niche. It's mainly sports.
Okay. So would it be ESPN? Is ESPN in there?
So what they're doing, so it's sports.
See, I told you this was confusing.
It's confusing. This is what all, people who are sports fans, this is what they complain about now, which is that it's impossible to figure out where anything is being streamed or played, and it's so expensive now because for the longest time, for the past many years, sports has been what has been keeping the cable bundle alive. But as Amazon and Netflix and Google, through YouTube have cropped up and with their unlimited budgets, started getting into the sports streaming business and winning the rights to broadcast some of these games, the legacy players are having to come up with their own solutions because they realize people don't want to pay $80, $90 to get access to everything.
Ugh, it's like everything old is new again, or new, I don't know. They're going to have a combined 6.2 million subscribers in North America, so the new venture will trail only YouTube TV. That's impressive numbers, but it does feel like a mishmash. And is it? And why are they doing this?
So a lot of analysts honed in on the second part of the deal, which is that as part of all of this, Fubo has agreed to drop its legal charges against Disney, Warner Brothers, and Fox. And so it had filed an antitrust lawsuit last year, basically alleging that their plans to roll out their own, digital sports streaming project called Venue Sports was anti-competitive. So basically, that as part of this deal, they're like, okay, never mind, we'll pull our suit, you guys can do that, and we'll just get absorbed by Disney, which is great, win-win.
A few weeks ago, my dad talked about this because he quit the bundle and now has YouTube TV and likes it a lot, but he was talking about how they sent out this email saying it's going up to $80 a month now. And it's like, what a typical cable subscription would cost. And online too, everybody was complaining about that. Does this actually create some competition to YouTube TV?
It does. So they become the second biggest, virtual pay TV provider, but behind YouTube TV. And what they were saying on the earnings or on the call, releasing this, was that they're going to be able to offer some more flexible bundles. So it's not just going to be the straight, like, you pay $80. Like, maybe you would pay a smaller amount if you wanted a skinnier bundle, is what they call it in the industry. And there are also some, like, carriage agreements as part of it, where now Fubo will be able to play things from ESPN, or from Disney. So,
what makes this even more complicated is the fact that you have, like, Apple and Amazon right now jumping into the fray with live sports.
Well, and that's why this is happening, because Disney needs to be able to compete with Apple and Amazon because they have unlimited budgets, and they're proving to be, and Amazon, they're proving to be really, formidable competitors when it comes to this.
Right. So actually, in some ways, buying out one potential competitor as well, right, in the space, if Fubo was looking to do sports on their own as well.
Yeah, and it really is a lifeline for Fubo because they were struggling as the smallest.
Because they're going to get a bunch of cash as a result of this.
Right, and yeah, so they're getting help and more skill.
But my Hulu subscription is fine. Nothing changes. I can watch.
If you're not watching Hulu live,
what have I been watching?
This to me is so indicative of what's going on more broadly in kind of the content space. Michelle, thank you so much. Really appreciate it. Michelle Davis, senior M&A reporter for us here at Bloomberg News. You can read more too on the Bloomberg terminal. But I just watching Golden Globe last night, and I'm like, content is coming from everywhere. And I think about and it made the Golden Globes for me not a lot of fun. It just wasn't fun.
I don't even know where to go because I think the only thing I saw that was
Chris
mentioned
Rouser's looking at me like, I don't like you anymore.
Why? What's wrong with Carol? What did Chris?
You didn't think they were fun?
I didn't.
That's Chris Rouser, Bloomberg Pursuit's editor.
I didn't. I liked some of the people who won, but it felt like a messy, slow program.
Oh, interesting.
Tell me what your take was.
I went into the Golden Globes last night thinking that they were going to be bad. Because for the past couple of years, they've been uncomfortable to watch, like really, really stumbling. And I thought Nikki Glaser, the host, was very funny.
Okay, I thought she was the highlight.
Yeah.
Right? Okay.
Can we talk about the Tom Brady roast, though, or no?
Well, what about it?
Like, it was very different. Full disclosure, I did not stay up to watch.
She knew her audience.
Very different than, a lot of people were concerned that it would be like, they knew Nikki Glaser because of the Tom Brady roast.
Yeah, she's a comedian who's famous for roasts.
Yeah, and they were like, how is, and she basically said, I'm not going to go and Ricky Gervais this. Like, I want to do this again. This is, so you're not going to get roast from me like you got yours.
I mean, it was roasty, and it was all just on the edge of like what you could say on TV and like what wasn't horrible, like what wasn't too far. And you could see like the camera would pan to whoever was being made fun of, and that person would be like, "Can I laugh? I think I can laugh. Yeah, I think I can laugh." And the people around them would laugh. I thought it was a very delicate line that she tread, and I thought she was very funny. And
I thought she was edgy,
jokes that we will not repeat on the radio.
No,
but like that we're okay for TV after 8 p.m.
Right? There were some areas that they went,
Yeah.
and I'm trying to think. Even was it a couple of the people on the stage, like some little skits, right? Some of the little were like.
Seth Rogen and Catherine O'Hara, I would not repeat those jokes.
And that was
either.
one of my favorites.
And
there was a funny one about
funny.
RFK Jr. that you can repeat.
Yes.
Yeah, like, the names of the shows and
right,
it's
like
not what you find in his freezer.
Baby reindeer, it's not what you're finding in RFK's freezer.
That's funny.
That was funny. That was good. That's funny. That was really funny.
I liked also when she said the point of making art is not to win awards. The point of making art is to make a tequila brand so popular that you never have to make art again. I thought.
And you know what?
Correct.
And you make that brand, and you're in Pursuits, and you're also on our air. Because
Right,
we have all those
exactly.
people. Like, it's really kind of amazing.
And yet George Clooney is still working for some reason. I don't know why.
He works because of the love of the game, Chris.
Oh, yeah.
That's why.
Me too. That's why.
Any surprises last night?
I have to say, I was surprised that Wicked did not win any awards. They won the big box office award that the Golden Globes created to kind of recognize big budget movies like Barbie last year that maybe otherwise wouldn't get recognized in sort of an auteur Hollywood kind of situation. But I really thought Ariana Grande was going to win for Wicked, and Zoe Saldana beat her for Emilia Perez, which is also an incredible movie and a big swing, and Zoe is really wildly good in it, but I just sort of thought it was going to be Ariana Grande's year.
Yeah, I think it was surprising on a lot of fronts in terms of what people thought were going to win.
Mm-hmm.
Like, I don't know. I kind of thought, I love Shrinking, and I was kind of hoping Harrison Ford, but Shogun, like, anytime that came up, I think there were 2 awards, right?
Yes,
they won.
Yeah,
which is also,
I think that was the only thing
good.
I saw that was nominated for anything.
I was going to say I did not see that.
You didn't see Shogun?
No, I haven't watched it.
All right.
We have children, and it's like, as prestige TV is tough.
It's very tough. Put in bed, then, you watch like 15 minutes at a time.
But you know what blew me away, Chris, is I just remember the era, like whether it was Sopranos or Sex and the City, like there were just those eras where like shows dominated and the whole cast was there.
And also networks dominated, HBO just dominated or something like that.
Yeah, well, this is in the era of, as the New York Times critic said, this is kind of mid-TV era. There's like a lot of like shows with big famous people in them that are, okay. And like there are also a lot of really good shows and there's a lot of bad shows, and the plethora of good shows is really sort of on display at the Golden Globes, also where categories are kind of mashed together more than they are at the Emmys because there's also movies in it. So yeah, it felt like There were a lot of things that I didn't necessarily watch, but I thought everybody looked good.
Do you think she'll be asked back? I think so.
Oh, yeah.
Totally, right?
Oh,
I think
yeah,
so,
yeah.
too. I think she was good, though. She wasn't afraid to kind of go for it. Thank you for coming in.
Of course.
So appreciate it. Our Chris Rouser, he is the editor of Pursuits, and this is Business Week.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Medical product manufacturer Stryker makes it official. It is confirming it has agreed to buy Inari Medical for $80 a share in cash. Also after the bell, we learn that Meta Platforms has elected 3 new directors to its board, including Ultimate Fighting Championship CEO Dana White, one of the media industry's most influential executives and a high-profile campaigner for President-elect Donald Trump. S&P 500 index today gained 32 points, was trading above 6,000, end of the day at 59.75, up 0.5%. The Dow down 25, down 0.1%. The Nasdaq Composite Index up 1.2%. The Nasdaq 100 Index up 1.1%, and a retreat for the Russell 2000 Index down by about 0.1%. 10-year 4.60%, with the 2-year 4.25%. Gold down 0.1%. 26.36 $3.36 the ounce. West Texas Intermediate crude oil down 0.6%, $73.49 a barrel. And a surge for Bitcoin just above $102,000 right now, up by 3.6%. Disney and streaming provider Fubo TV have agreed to combine their online live TV businesses. Disney down 0.1%. Fubo surged 251%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, the so-called Magnificent Seven, we talk about them each and every day. Yes, I'm going to remind you, it's Apple, Microsoft, Alphabet, Amazon, NVIDIA, Meta Platforms, and Tesla. As a group, they were up close to 70% last year. And then in 2023, up 107%. Yet our next guest writes in his new book that, quote, the dominance of these seven is likely to be as transitory as that of the large business of early generations. He offers U.S. Steel, General Motors, and IBM as examples of companies whose shares investors once clamored to buy, just like these of the Mag 7.
Sir John Kay is a writer, professor, economist, economic consultant, a fellow at St. John's College, Oxford, and more. He has spent years studying the interplay between business, economics, and finance. This is so perfect for our audience. His new book is The Corporation in the 21st Century, Why Almost Everything We Are Told About Business is Wrong, which comes out in the U.S. tomorrow. Sir Kay joining us, Tim, from London.
Hey, Sir John, good to have you with us this evening. Thanks for joining us. As you write in the introduction, your target audience is people who would never normally pick up a business book, people who read popular science or history but might welcome an intellectually serious, even sometimes challenging approach to a subject with whose detail they are unfamiliar. Why go for that target audience right now?
Because there are a lot of people who are intelligent people who have opinions about business that are formed on the basis of very little. And as I say, there are two kinds of business books and bookshops, right? One are the ones that are 5 tips as to how to run my business better on Monday. And the others are how awful capitalism is and how terrible these tech titans are and how they ought to be cut down to size, if not put in jail. And I want to write for intelligent people who take a view somewhere in between the two, or just want to know about business the way people want to know about history or science.
Well, when you look at
how it
business,
works.
you know, Sir John, when you look at businesses today, it does feel like increasingly, even though a few years ago it was all about multiple stakeholders, employees, customer, companies, so on and so forth, it does feel like it is not necessarily the case. And increasingly, it's about profitability and the C-suite. Many would say this. Is that fair? And I mean, is that accurate?
I think it would be right.
Yeah.
Well, it would be partly right. And the truth is that business is about creating great businesses. And we have a striking example of that at the moment. We have many. But one that is absolutely on your lips at the moment is Boeing. And in the second half of the 20th century, people at Boeing built a great business, the world's dominant aviation producer. And they were clear that that was what they were doing. Bill Hallen, who was CEO of Boeing for some time, said, we're here to live, eat, and breathe the world of aeronautics. That was what his Boeing was about. And it built planes that came to dominate the world. Then in the turn of the 20th century, there was a takeover, or a merger rather, which was effectively a cultural, although not a financial, takeover by McDonnell Douglas of Boeing. And Harvey Stonecipher, who was became CEO of Boeing. He had been a McDonnell Douglas executive. He became CEO of Boeing. And he said, people say this is a great engineering company. It is, but people invest in a company because they want to make money. And we know the things that followed from that. The 737 MAX, which ended in disaster. And now we have this farce of astronauts stranded in the International Space Station, waiting for Elon Musk, ironically, to come and rescue them.
Sir
They
John.
set up to build great business, they did. Then they emphasized shareholder value. And they destroyed, in the end, not only the business, but the shareholder value.
Well, it sounds like that's a case of incentives not necessarily being aligned here. And I know as an economist, you study incentives. Are the incentives of the structure that we have that exists today, are they misaligned? Because companies are rewarded for what they're able to do on the top line and what they're able to do on the bottom line. That's what they're rewarded for. Is that the wrong thing for them to be rewarded for?
They're not really rewarded on what they do on the top line. They're rewarded on a basis of some 3-year metrics and what happens to the stock price. They're not rewarded for creating shareholder value in the long run, which is what these 20th century Boeing executives actually did. The way you create shareholder value, actually, is you build a great business. And if you build a great business, shareholder value follows from that. It's that way round. I was interested that one of the reviewers of my book was someone who had been an English Test international cricketer. And he drew my attention to the book by football coach Bill Walsh that says the score takes care of itself. And that's the message. If you build a great business, shareholder value follows from that. Maybe the guys who took over Boeing in the 21st century created shareholder value. They certainly paid quite a lot back to shareholders in the 2010s, but they did damage irrevocably, I suspect, the reputation of the business.
Sir John, as part of the problem, you know, my husband and I talk about this all the time, is that we don't make a lot of stuff anymore. We're such a service-led economy, and I don't know if that has changed the dynamics within companies and leaders and so on and so forth. And I'm just curious, I'd love to have you weigh in on that. Is that part of the problem?
It certainly has happened, but I don't think it's part of the problem. Indeed, it's almost the opposite of the problem, because it used to be that businesses were created by capitalists, by rich men who spent some of their fortunes on building steel mills and textile plants and so on, and employed typically rather unskilled workers to work in them. The great businesses now are groups of highly qualified, technically proficient people, and the business of running the business is to put together the right combinations of people. So we've had that change which has happened, so that the means of production are now the people, not the plant. But on the other side of that, we've had basically since the 1970s the growth of this idea that the purpose of a company is to make money for shareholders, the shareholder value creed. And these two things have been pulling in opposite directions in ways which I think in the end damage the legitimacy of the whole market economy as we've known it.
So what is the purpose of a company?
The purpose of a company is to satisfy a whole range of stakeholders. The reason we allow companies to exist is that they do a lot of things we want done, to produce great products, to give people satisfying jobs, to make money for shareholders. It isn't any one of these things. And if you try to emphasize any one of these things, you do so at the expense of the totality. And the people who built great businesses, whether we're talking about Sloan at General Motors, whether we're talking about Alan and others at Boeing, or whether we're talking about the people who built the Magnificent Seven, the tech companies we all talk about now, they didn't set out, I want to make as much money as possible. They certainly didn't set out to say, I want to make a lot of money for shareholders. They said, I want to build a great business. And they did. In the course of doing that, they made a lot of money for shareholders. And that's the way around it is. The score takes care of itself.
So let's go back to the Magnificent Seven and to the way that we open this, because you do argue in the introduction of the book that the Mag 7, even though people are clamoring to buy the shares of those companies, they're going to be just as transient as some of those large businesses of earlier generations. Why is that?
Well, they may even be more transient because their strength lies in their people rather than their plant. Whereas at Carnegie or Ford or General Motors, it was the plant that determined the business. These dominances are almost always transient. 30 years ago, when people understood that information technology was going to be a big thing, it was IBM whose shares they bought. They made that the most valuable company in the world. Now, Facebook and Meta are top of many people's lists. I know that Facebook, my grandchildren now think that's something for people of my age. It's not something
maybe not Instagram and WhatsApp, and that's what has been their saving grace.
Right. Well, and there's an issue there that we need to talk about, which is the nature of antitrust policy. And we allowed, mistakenly in my view, companies like Meta to take over Instagram and WhatsApp, whereas the whole strength of the market economy comes from people devising new things to take the place of the things that went before. Actually, Facebook took over from MySpace, which was the predecessor of Facebook in providing the kind of services that Facebook does. People have forgotten about MySpace now. Interestingly, MySpace, when I talked to executives there as to why things had gone wrong, they said because it was bought by News Corp and Rupert Murdoch, who were mainly interested in creating shareholder value.
It's interesting.
So, John, one thing I want to ask you is if, your title is Why Almost Everything We Are Told About Business is Wrong. So if that's the case, I am wondering, in terms of academic research, consultants that abound in terms of, trying to figure out or trying to tell or do tell companies what to do. If we are getting it wrong, what's the outcome of that? And if we don't get it right, if we don't maybe perhaps change the academic research about how we think about companies, if we don't do that, what's the outcome?
I think the outcome is that we get things wrong in a pretty fundamental way. And in the first half of the 20th century, people saw themselves as trying to create a profession of management, which was a respected profession, like law or medicine or the priesthood or whatever. When people were called to do that, and derived a lot of the satisfaction of their job, not just from from what they were paid, but from the feeling that they were contributing something worthwhile to society. We've lost a lot of that, and I think it's made business a good deal worse as a result. And we can see the kind of loss of legitimacy that has followed. The murder of Brian Thompson 3 or 4 weeks ago is a pretty good example of that. The fact that almost 40% of the respondents to a poll suggested that murder was at least partly justified. It seems to me a terrible commentary on the way business is now regarded among a large section of the population, particularly the young population.
Is that a commentary on business, or is it a commentary on the structure of healthcare in the United States, which is a result of decisions that politicians have made?
It's a combination of both. I mean, that healthcare is the forefront of that. Because again, go back into the 20th century, and you see how healthcare created antibiotics and vaccines and other drugs that saved lives and made a great deal of money for the companies that produced them. We've now moved from a healthcare sector that is largely, people see it as being rather there to make as much money from us as possible, from our need from healthcare. And that's why people seem to approve of the murder of Thompson, who 50 years ago would have been appalled by it, as they should be.
So where do we go? Or again, I want to kind of dig to, the repercussions, and I do actually think about how politics fits into all of this, of a society that doesn't feel like they're represented anymore. I mean, if you've got, I think this is from your own website, the widening gap between executives and employees is destabilizing our societies. Facebook and Google have more customers than any companies in history, but are widely reviled. So I do wonder, I don't know, is there a realization and we come out on a different side, a different view of the relationship between employee and employer? Like, where does this all go in your view? Or how does it, what's the dark scenario? Yeah, go ahead.
We've had a culture change in the last 50 years in the wrong direction. I described how in the first half of the 20th century through to 1970s and 80s, we had the idea that we were trying to create a professional management. People who were employed in large companies were there to create great businesses. The shareholder value idea that businesses are just about making money has got in the way of that. Now, this is not to say businesses are not there to make money. They are there to make money, but they're not just there to make money. And if they're just there to make money, they're not that successful, even at making money. I think Bear Stearns famously had a sign saying, "We make nothing but money." And it's interesting that they ended up not making any of that.
Is there a company, and we're just got about a minute or so, that you look at and say, okay, they've got it kind of right, the relationship between employer and employee, that maybe is a model for the way forward, perhaps?
I think there's not a model in that sense because people cannot talk the right rhetoric. But if I go back to the 20th century, if I go back to General Motors and IBM, and as they were in the years we've talked about, they were the people who were working in them, the people who were running them, the people who worked for them, knew that they were there to create businesses, great businesses. And if you create great businesses, you make a lot of money for stockholders. That's the way round it is. And that's the most important point to get across to people.
So then what was the result of their why did they have a downfall? What happened?
I think it was a set of social changes that happened as a result of the 1960s. I talk about this at some length in the book. Money can't buy me love, can't buy you love, which was a great Beatles song of the 60s. And then I say, well, perhaps it can. And that's about the academic work that followed from that. It's easy to date it to Friedman's article in 1970 that said the social responsibility of a company is to maximize its profits. Perhaps more significant was the Powell Memorandum, written by Lewis Powell, who became a Supreme Court judge, which tried to persuade business that the way they made themselves more legitimate was to sponsor the right kind of academic research. And they're very successful in that. And the Cato Institute and the Heritage Foundation, the Business Roundtable, all were set up in the 1970s in response to this kind of thinking. And we can see that in the end, it hasn't made business more legitimate, it's made it less so.
Think about Peter Goodman's book, right? We were talking about this in
How the world ran out of everything.
Right, and the role of consultants, many things at play, but everybody outsourcing, looking to kind of do things in a more efficient way or so, and the supply chains that moved outside the United States.
And the Business Roundtable back in 2019 with that letter that, that statement of purpose of a corporation that tried to sort of redefine the purpose of a company. That was, 6 years ago at this point.
Well, Sir John Kay, you gave us a lot to think about. So appreciate your time and good luck with the book. Really appreciate it. Thank you.
Pleasure to talk to you.
The new book, The Corporation in the 21st Century, Why Almost Everything We Are Told about business is Wrong, comes out in the United States tomorrow.
All right, everybody, let's get a quick check on the market. Some news after the closing bell. Once again, we go back to Charlie Pellet. Hey, Charlie.
Hi, thank you very much. Start of the week turned out to be a day in which the S&P 500 index did gain 0.5%. The Dow, though, lower, down just about 0.1%. NASDAQ ripping higher by 1.2%. The NASDAQ 100 index up 1.1%. But the Russell 2000 index of small cap shares fell by 0.1%. 10-year yield 4.61% with a 2-year at 4.26%. Gold little change, down 0.1%. 26.36 the ounce. West Texas Intermediate crude down 0.7%, 73.41 a barrel. And Bitcoin up 3.4%, 101,810 right now on Bitcoin. Tony Roth is Chief Investment Officer at Wilmington Trust, and right here on Bloomberg Business Week, he told us you got to keep an eye on the 10-year.
The 10-year is really a great proxy for how the markets are viewing the overall program, economic program from this new administration. And if we move to a level that starts getting into the 4.75 to 5% range, that's going to really scare this president.
Tony Roth of Wilmington Trust. And again, the 10-year now, 4.61%. Medical product maker Stryker confirms it is buying Inari Medical for $80 a share in cash. Meta Platforms has elected 3 new directors to its board, including Ultimate Fighting Championship CEO Dana White, one of the media industry's most influential executives and a high-profile campaigner for President-elect Donald Trump. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Carol, I don't want to pry too much, but you a big Zyn user?
No, I don't think so.
You don't think so? I think you'd know if you were. So for the uninitiated, Zyn is a brand of nicotine pouches. They're essentially becoming the new vapes. In other words, the first mainstream nicotine product to hit a cultural nerve since the ill-fated Juul. I actually first kind of heard about them on an Oddbots podcast.
Did you really?
About a year ago, I guess.
Okay.
Yeah. They got nicotine. They've got plant fiber. They come in a, chewing tobacco pouch. They're 2 chewing tobacco pouch type thing in a canister that the hockey players in college would have in the library when I was in college.
You're so cool.
I'm not cool. They were cool. But Zyn's rise over the past year has been fueled by decentralized, unsanctioned citizen marketing on TikTok and Instagram Reels, a far cry from the deliberate Mad Men era crafting of ad icons like the Marlboro Man and Virginia Slims. It was the big take.
Yeah.
On Friday, we wanted to speak to Ellen Hewitt.
Dying to talk to you. Ellen writes about this in a recent, as Tim mentioned, Bloomberg Big Take. She is Bloomberg News Tech Features writer, and she joins us from San Francisco. All right, lay it out for those like me, raising my hand, didn't really know about this. So tell us what's going on here.
Right. So this is all about Zyn sanity, Zyn mania. Zyn, as you explained, is the brand of it's the foremost brand of nicotine pouches that's out there on the market today, and this, as we described, is kind of the next vaping. It's basically a new form of nicotine delivery with arguably some fewer of the health risks involved. But I think what's most interesting about Zyn is that it wasn't, its makers didn't know it was going to be this big hit. It actually was originally made as one of these kind of nicotine replacement type products that have traditionally not been that cool, like nicotine lozenges or gum or toothpicks or, mint strips that you can dissolve on your tongue. This one just happened to catch fire culturally. And as you probably have, if you have heard of Zyn, then you recognize that over the last year it has become really popular. And so what the story tries to get into is the social media aspect of it, the way that these Zynfluencers, who are content creators who have been posting a lot about Zyn, the way that they occupy this odd and unusual place in the online sphere, which is that they are basically making free advertising for Zyn, which is owned by Philip Morris.
Why are they doing this?
Because and notably they're not getting paid. So even though it looks like they post about Zyn all the time, it looks like they might be getting paid by PMI, Philip Morris, the owner of Zyn, but they are not. PMI swears up and down they are not paying social media influencers. They're just doing it for the viral attention because Zen happens to be something that is part of the hype cycle, the cultural zeitgeist right now. There's a lot to be gained from making Zen content. So I spoke with Zinfluencers who are basically making free ads so that they can grow their following.
But when you talk about the following, I mean, they're kind of all over the place, right? I think you say in the group, various groups have called dibs. Post-college frat guys, hockey bros, conservative pundit Tucker Carlson, even Wall Street analysts with 100-hour work weeks and contrarian-minded Silicon Valley founders looking for a nicotine productivity zing without ever stepping away from their desk. I mean, a lot of folks look to be tapping into this.
Yeah, that's exactly right. Zen is not just for one group of people. There are several groups that have sort of claimed Zen as their own. It's got a right-wing bent. I think the Nelk boys, Tucker Carlson, up until recently was a big Zen fan, but also kind of like productivity junkies, like Wall Street analysts, people in Silicon Valley. These people who became addicted to nicotine maybe via vaping.
I was going to ask you, is it Juul 2.0, 3.0? Is this kind of the next, what is this, next step?
Well, PMI and Swedish Match, which is the maker of Zen, which was bought by PMI a couple years ago, they would really love to not be the next Juul. Obviously, Juul had this big spike in popularity in the mid-2010s, but then, was kind of regulated pretty harshly by the FDA and became kind of what we call the marquee villain of the vaping crisis, of the teen vaping crisis. So Juul got in trouble for hooking teens on nicotine. Zen would really love to not do that. And so, of course, they have tried to be very careful. But the problem is that social media is full of teens. And as long as there's a ton of Zen content on the internet, teens are going to be getting exposed to this. So it's possible it could be the next Juul.
Ellen, we only have 30 seconds left, but I do want to save some time for the potential health effects of Zen because, like vaping, a lot of people at the beginning thought vaping was a lot healthier than smoking cigarettes, and then we started hearing about formaldehyde, popcorn lung. 30 seconds, what happens to people who use Zen or nicotine pouches?
It can, I mean, obviously it's an addictive chemical, so that's the major issue. And that's expensive and bad for your health, especially if you're young. It can give you mouth ulcers. It's hard on your GI tract. I talk to people who just say, it kind of messes up your stomach. And the big question mark is we don't know what the long-term health effects might be.
I'm just going to say, Ellen actually tried it for the good of her reporting. I'm not going to share it with everybody. I'm going to make them go to the Bloomberg or Bloomberg.com because what you say about it, I'm just going to say fascinating.
That's where you're going to leave it?
I take my reporting seriously, yeah.
Absolutely. Great stuff as always. Thanks. Ellen Hewitt, you rock. She's Bloomberg News Tech Features writer. And as I said, check it out at Bloomberg.com, on Twitter, on X, and on the Bloomberg.
This is Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I am Tim Stenovec. You're listening to and watching Bloomberg Business Week. I'm just kidding. Carol's not doing any Zen. We're talking about the
I am
big
not
take.
doing it.
Never.
I'm sorry.
We were talking about the
I
big
know we're
take.
not supposed to give our opinion, but I mean, I don't know.
Not for you.
Court cases, doctors have
Big,
told us
kind of big on
nicotine.
Wall Street. It's kind of big on Wall Street among young entry-level bankers and recent grads and
Or
stuff.
so they say, because you don't have to leave, right? You can
So
get
they
a little
say.
bit of a buzz,
Yeah.
I guess, off of it.
Yeah, exactly.
Yeah, so interesting.
We are talking about the big take from Ellen Hewitt. We just spoke to her. Check it out on the Bloomberg Terminal. Another
story.
tease for her first attempt at trying Zen, and she writes about it.
Hey,
These
listen,
influencers.
one of the things that we love to write about here at Bloomberg, and it always ends up hitting up high on the most read on the Bloomberg Terminal. This story is actually coming from the Wall Street Journal, and it talks about a Hudson Valley mansion relisting for a fraction of the price. So apparently, according to the Wall Street Journal, when it first hit the market back in 2021, so about 3 years ago, for an eye-watering $45 million, Monica and Jacob Friedman's riverfront home in the Hudson Valley was lauded as a feat of modern engineering. It was known as Ledge Rock. The roughly 15,000 square foot residence hugs the bank of the Hudson River with a travertine patio that hovers just above the water. More than 3 years later, Tim, though, it's going for a bunch less.
$11.25 million, a quarter of the original price, and the Friedmans no longer own it.
No. Now the seller is an affiliate of Curium Capital. It's a New York-based litigation finance firm that lent about $13.2 million to an entity tied to Jacob Friedman back in 2019. This is according to some property records. The Curium affiliate took title to the house in September of 2024, so late last year, is now looking to get the home off its books, according to a Curium managing director. Yeah, I would imagine that they would like to be rid of it.
This is in Hyde Park, New York. It's about 90 miles north of New York City. The
Yeah.
Friedmans paid about $1.5 million for a 5-acre waterfront parcel back in 2005, and over time amassed 10.7 acres of land. Property records
We talked
show.
about this property because I remember it's multiple terraces. It's got 45,000 square feet of fossilized limestone. It has an all-steel superstructure that rests on bedrock. It feels very, who am I thinking?
I don't know. Superhero lair?
No, the architect.
Oh, Frank.
Yeah, Frank Lloyd Wright. It feels
yeah.
very Frank Lloyd Wright, although
Okay.
I haven't seen it. I don't know if there's a picture here.
Inside, there are exotic wood and stone finishes along with a concrete stairway. A separate building contains a 2-bedroom guest house, garage, and a car wash.
Yeah.
Okay. Hey, I did want to switch gears a little bit. Elizabeth Sedrin sending us an article from a little earlier that I did want to hit on because you and I were talking about
No
this.
easy turn here.
No easy segue, but you and I were talking about this a lot last week when it comes to risks that are out there.
Food chain.
Food chain, the food supply.
Yep.
A patient in Louisiana who tested positive for bird flu has died, making the first U.S. fatality linked to the respiratory virus.
Patient was over 65, had underlying medical conditions, according to a statement from the Louisiana Department of Health. No additional cases have been identified, and there's no evidence of human-to-human transmission. But the patient did get H5N1 after exposure to a non-commercial backyard flock and wild birds, according to the state agency. Resident was hospitalized in December with the first severe human case of avian influenza in the United States.
Health officials have been on high alert as the H5N1 strain of the virus has spread throughout U.S. poultry and dairy farms. While dozens of people have been infected, there's no sign so far that the virus is spreading among people.
Yeah, and we don't want to be inflammatory because it says this story also, most human bird flu infections, just to remind you, have occurred in farm workers exposed to infected animals, causing mainly mild symptoms. There have been 66 confirmed human cases in the United States so far, according to the Centers for Disease Control and Prevention. But I gotta say, you know, we all get a little hinky when we start to see these kind of things.
Yeah, I think everyone remembers other times in our lifetimes when we've seen sort of 1 or 2 cases of something pop up and then it turned big.
Not going to be a problem. Not going to be a problem.
There's also the concern about a executive shuffle at HHS and RFK coming in, the turnover in the administration, if he does get confirmed, how his CDC would treat cases such as these and oversee the office that and the agency that does deal with this type of outbreak in the U.S.
I think it's safe to say that ever since the global pandemic, and again, we're not looking to be, you know, alarmist, certainly not, but it just is a reminder that the unthinkable can happen. And, you know, we have a lot of individuals, we live in close proximity, the food chain, you know, can be strained, there's a lot going on. in different places, so you can see sometimes some difficult situations get out of hand. So anyway, we're going to have to keep an eye on this. Oh, go ahead. Make that segue.
No, I'm not going to make the segue here. We talk a lot about changes at companies when it comes to DEI.
This is
and
happening
a lot of companies rolling back.
Increasingly.
We talked about Deere, for example. Other companies include Walmart, Nissan, Toyota, Ford, Harley-Davidson. The latest, McDonald's, revamping its approach to DEI, becoming the latest large company to change its strategy as the once ubiquitous goals come under pressure from conservative advocates.
Companies saying the changes have been under consideration over recent months and were the result of a variety of factors, including the Supreme Court decision and the, quote, evolving landscape around DEI in the United States. Man, how quickly things have changed, going back to the pandemic, the murder of George Floyd, and just in general, right? The rise of DEI initiatives at companies.
The company will no longer set